big one today with earnings. We are in the middle of earnings season. It kind of feels like we're on the latter end because we had so many earnings last week, but this week right here really is the middle of earnings. We got NVIDIA obviously at the end of the month. We had big tech last week. Today's a big one. AMD, obviously massive company in the semiconductor space. And we'll be talking about that one. SpaceX, the first public quarter this company's ever having. So there will be a lot to analyze there. You got Zeta, you got Upstart, Opendoor, just a bunch of different names that we'll get into. And quite frankly, based on the performance of what's happening in the stock market today, it seems like it is literally the best day for the S&P 500 of 2026. Everything pretty much is green. S&P is up 2%. I don't think we've had a 2% day in 2026. And if we've had, it was a long time ago. 773, just a massive day. Neil, your thoughts on all this momentum today?
I mean, I hope it lasts. In the meantime, we are all happy, I guess. But we've had these green days before, and then we got hit by a couple of red days. So it is what it is. Right now, we have the momentum, so we should all be a bit more optimistic. I think what's more important is the companies that are reporting earnings have all been crushing it. I mean, yesterday, Palantir absolutely knocked it out of the park. Today, it's up, 25%, maybe more. And so, yeah, I mean, we're here, up 29.5% right now. So definitely some momentum in the stock market, but we do have also companies that just report excellent quarters. So that's very good.
Tanner, first day, hyperscaler, semis, and software all went up. Do you kind of think we're out of the woods here and maybe there's a lot more momentum for the broader markets in general?
Yeah, I mean, I don't think we're overvalued or anything like this based on one strong day of like one really great day in the markets. That being said, we obviously have been selling off for a while now. I do love to see this appreciation, but anything can happen from Trump announcing further conflicts with Iran or a souring macro that could have us selling off once again. So I don't think we're out of the weeds or anything, but obviously brand new all-time highs on the S&P 500 is a great sign to see. And doesn't mean that we're just focused into one sector. You know, we're seeing broad appreciation across the board, and it's probably healthy for most people's portfolio.
Jose, AMD, you and Neil, I believe, have held on to this name for the longest out of all four of us. Give me your thoughts. What are you expecting? The stock fell to almost $430 last week. Now, not that far from $530, $100 swing at 600. It's a $1 trillion company. Do you think we get the results we need to get this thing to move today?
Yeah, well, first, let me just say, I was super excited coming in to the stream. And then Neil and Tanner kind of just brought me back down. It's like, come on, guys. No. AMD's, I mean, I'm pretty excited for AMD's earnings. I want to hear more about, obviously, the CPU market. We just had their AI event a few weeks ago. They doubled their AI CPU TAM. Compared to just 3 months ago. So I want to hear more about that, seeing if that's kind of giving results right now, which I think they are. Then for Lisa Su, she has been historical at kind of not giving us much guidance on the AI GPU space. But now when you have big customers announced with Anthropic, with OpenAI, with Meta, with Microsoft, I think she has to give it to investors. She has to tell us that kind of GPU guidance or that AI guidance for the upcoming quarter, especially since Q3 is when we start ramping up the Helios in the last month. I think September is when it comes up. So I would love to hear a lot of more clear commentary, not just directional commentary, but commentary with some numbers behind it. And I think that's what I think that's what most AMD investors would be looking for.
Neil, or Tanner, any thoughts on AMD?
Well, I don't know. I'd like to hear from Neil, considering we're letting Jose down. What is that about, bro? I came on here to be specifically with you, and no, I'm super excited. Me and Amit were just talking earlier, but although I'm not a shareholder in AMD, I expect nothing but the best from them, considering that demand for chips across the board is going to way outstrip their ability to, like for TSMC to supply this many chips. So AMD is likely going to crush their numbers. They are full force going ahead and trying to produce as many CPUs, GPUs as possible. They'll likely beat across the board. I'm excited to see if they continue to hold up or even potentially extend guidance even further. Those are going to be the things that I'm looking forward to, because if you see it from AMD, you're likely to see it from NVIDIA or Cerebras or some of these other companies. Maybe some additional details on that partnership that they did with Cerebras to sort of fight back against the Grok NVIDIA partnership. So those sort of details I think will be really important. But overall, I expect nothing but the best from AMD tonight.
And they have been beating expectations every single quarter revenue-wise. Not only that, over the next coming quarters, revenue is expected to accelerate, which makes sense because the MI500 series is going to launch. But the market is expecting 52% growth for this quarter, then 42.8%, and then it goes up 62, 69, 64% for the upcoming 3 quarters after that. So it's acceleration from here, and I don't even think that these numbers capture all the growth that's ahead from the GPU data center side to CPU server sides. Because, I mean, CPUs, one of the reasons why Intel has been doing so well this year is because that side has been picking up some steam. And so I don't see a scenario where AMD misses. It might just be a thing where, okay, we might not get enough information from ESA2 or so on the earnings call. But other than that, it's I don't see how they don't crush it.
One more thing. I do expect this to be the kind of AI story beginning for AMD. And by that, I mean, last quarter, you saw a sequential drop from the quarter before. But I think starting this quarter, we're only going to see sequential growth, like Neil mentioned, thanks to the Helios rack ramping up this quarter, ramping up at the end of quarter 3. So I think the AI story now begins with AMD. You also kind of have that tailwind for the CPU space. And when I mean that more in the revenue numbers. And Neil also touched it. This is a company that has outperformed or beat expectations. But the expectations beat has usually been about 5, 6, 7%. I don't think we've seen like a double percentage point beat on expectations. I think either this quarter or next quarter, I think analysts are going to be underestimating dramatically what AMD will be producing in revenue.
We got a couple updates from Burry. He just said he sold his Microsoft calls. He rolled his NVIDIA puts to June 2027 from January, low 100 strike. He closed his Palantir puts. He's continuing to short it, closed his Oracle puts, and he continues to hold the rest of his shorts on QQQ and semis. So technically taking some losses from my understanding based on closing some of these puts. Microsoft calls made some profits and continuing to have his broader puts on the market. SpaceX is the other earnings today that's really important. The interesting thing about SpaceX right here, this was tweeted. Elon just responded to it. Apparently, 95% of SpaceX stock that is available to borrow is out on loan, which amounts to about 34% short interest. There's only 4% of the fully diluted value of the float even available for the public to trade. We get another 116 billion that unlocks in a couple of days. Elon responded, I tried to warn them, but they just doubled down 2 hours ago. Do you interpret that as he's going to announce something big to squeeze the shorts again, or is it just fake words with no numbers to back it up? Tanner?
Yeah, I mean, it's as you see in the Chamath post right underneath that, it's exactly what happened with Tesla as well, and those people got stomped out. So shorting Elon in any factor has been a scary, scary game. I hope for Elon's sake that there's not going to be some unbelievable report this quarter that they're about to show off that might put him in some hot water by essentially saying this right before the call. That said, we're going to see a lot of the AI deals that we didn't initially see at IPO. I think the Anthropic deal happened, but the Google and Reflection deal and these sort of ones I don't think was part of the S1. So there definitely will be a sizable amount of new deals that end up coming online. It's just a matter of what else they're going to show outside of that, or if they're on track for things like their V3 satellites and what they're essentially planning on doing with the $85 billion that they just recently raised, that I think is going to be big questions for the future of SpaceX.
Yeah, apparently they partnered with NVIDIA today here to design the Starmine satellite. Neil, Jose, any thoughts on if SpaceX can get a pump? In the chat, by the way, from the poll I have, 64% of people think AMD outperforms, 14% SpaceX, 22% Zeta. So SpaceX is the most underestimated from most people here.
Well, it is the most. I mean, it's still what, $1.4 trillion or so. Plus, let's be honest. Eventually, they'll just merge with Tesla, right? Because that's what we all think is going to happen. How much are they going to pay for it? I don't know. But for his sake, I hope SpaceX stock goes up so they can just use that as a way to get Tesla for, let's say, cheaper. But yeah, it's going to be an interesting one. It's going to be an interesting one. Don't forget that the Anthropic deal can end in what, 3 months time or 3 quarters? What was it?
Yeah,
like
3 months.
It's 3. Yeah, so we'll see.
And I mean, SpaceX is now, to me, I added more of like a NeoCloud data point. So I'm going to be happy to hear kind of a little bit more, like Tanner was talking about, kind of these contracts, kind of the commentary of what's happening in the space. I would also hope an analyst to ask a question: why are you selling this compute if you kind of are building your own AI solution? So I think this is going to be the first time we're going to get a lot of these questions answered, of why maybe XAI didn't need all this compute. Was there a miscalculation? Was there an overbuild happening, or the reason behind it? The other thing is, obviously, people are excited about space data centers. I'm not too excited about that in the short term, but now we have kind of like a open call to be able to get information on that as well. So while I don't own SpaceX, I do believe it gives us a lot of great wealth of data points for the NeoCloud players and what's the future of data centers, and potentially also what we're seeing with kind of some of these frontier models as well.
Do you think they'll admit that nobody uses Grok and that's why they did those deals?
I don't think so, but I think we can try to read between the lines. I think depending on how they say it, because we know from Meta and Mark Zuckerberg that selling intelligence is better than selling compute. So we already kind of have that data point there. So depending on how he answers that question, I think we can read between the lines.
Yeah, I think like I was talking with Amit earlier, and I said at the right price, I would definitely be willing to buy into SpaceX. I don't know what that price is for you guys. I'd like to hear, but do you think that there's with the
Tanner,
orbital data center?
let me just close out the markets and then we'll
Yeah. Go ahead.
All right, folks, here we go. Big day. AMD, SpaceX. Thank you everybody for being here at 4 p.m. The stock market, which had one of its best days all year, is now closed. All right. Go ahead, Tanner.
I was just going to say, do you guys think that orbital data centers will become popularized quite soon? We've seen some moratoriums in New York, concerns about water use, all of these things. Do you think that that's the key answer to some of the problems that, certain sides have had with this data center build-out?
I mean, if I had to answer that, I think orbital space data centers will absolutely happen. I just don't know when, and I don't think Elon knows when either. I think
you're a little quiet on my thing.
Can you hear me now?
Yeah.
Better?
Yeah.
I think the space data centers are going to happen. I just don't think we know when, and I don't think if we get any meaningful updates from Elon on this call that we're going to be able to fully have an accurate vision on it. But it's going to happen. Like, it makes sense. It's just a question of when is it going to happen and how can it be monetized? And when it does happen, it's going to be massive. It just might not happen in the next few years, right? And that's why I think the market's going to have to be a lot more keen on expecting those results. Palantir, by the way, 29% on the day. Massive move. S&P 500, that was up about 1.79%. Tesla was up 1.64%. SpaceX, end of the day, up 10%. One of its best days in over a month. You had Zeta, that was up 1.4%. 2460 was up 7% during the day. AMD, which got a little bit of a sell-off right into the close, 530 to 519. But that stock's still green. We have till 4:15, so we have about 14 minutes until AMD And then we'll take a look at that. Rocket Lab, that was up 5.75% on the day. ServiceNow, 3% on the day. Accelera, 4%. I mean, it's kind of hard pressed to find any stock that really ended red on the day. It was one of those
numbers
days,
killed it.
It was one of those days where everything kind of flipped green, and you're seeing that momentum in the market right now. Kratos up 5% after hours.
Revenue beat by 12%. Wall Street was expecting 411 million. They did 458 million. Wall Street wanted 15 cents of EPS. They did 21 cents, beat by 40%. Absolutely huge crush.
You know what was red today? Meta and Amazon. If you
part of the reason for that is because usually when everything else rallies, the hyperscalers get back a little bit. But also, I found out Bezos sold at 271. That was his exit price for $4 billion worth of stock yesterday.
Yeah.
So that probably created some selling pressure. Again, AMD's in 15 minutes, so we have a little bit before we get there. Okay, SpaceX, it's out. Second quarter revenue, Street wanted 6.8. They came in at 7.8. That's a beat by about $1 billion. Don't have EPS yet, but we should be getting it soon. Stock's up 2.4 after hours.
Yeah, so I was about to say that the estimates for SpaceX right now seem quite low, like 6.8 this quarter. Okay, they came in 7.8. Then next quarter, 12 billion. Then 15.8, and then 16.3 and 17.6 billion basically a year from now. It seems a bit low based on the cloud growth that they are expected to experience, etc. It's like, I don't know how many analysts actually cover this company right now, but estimates are bound to be a bit higher than that.
Okay, operating loss on their AI segment, which I think is their NeoCloud business, 1.26 billion. The street thought it would be 2.39, so they lost a lot less money than expected. Stocks at 126, it did touch 130. They ended 2Q with 47.5 billion in backlog, which we'll have to look at the year-over-year growth on that. We don't have EPS yet. EPS Street wants negative 23 cents. I don't see EPS numbers, but revenue's a beat, and then operating loss on the AI business. Stocks now going red slightly was a beat.
Wait, so their backlog is less than half of CoreWeave's, and yet they are worth $1.4 trillion. Jose, what do you have to say?
Don't make it
about
make
this?
sense. Don't get me angry. Don't stop it, Neil. Just say something else.
But is this backlog only AI compute backlog or overall backlog? I would imagine the majority is compute, right? Okay, EPS, they lost 9 cents. They beat by 40%. They lost 9 cents. Street thought they would lose close to 20. Okay, so you got a double beat. Street thought they would lose 24 cents. They lost 9. Revenue 7.8 versus 6.87. It's flat. Let's see if it flips green. Touched 131. Now it's starting to fall.
Yeah.
Kratos up 8. We don't have AMD yet. SpaceX down 2. Zeta's up 4. I don't know those numbers yet. Just crossed 25. Open Doors down 3. Upstart's down 4. SpaceX right here down 3%. ANET as well. This thing is up 11%. I'll get those numbers.
Up 11.
Jose, you should be happy about that one, I imagine.
Astera Labs is up nearly 10% right now. I don't know if it's fading, but that one I'm happy about. I don't really follow ANET too much, but Astera Labs up 11% right now.
Okay, so these stocks in the networking space getting some love right here. Arista beat by 15% on EPS, 102 versus 89 cents. Revenue, there's up 38% year over year. They beat by 7%, 3.03 billion versus 2.83. EPS is up 40% year over year. Those are massive double beats. And this stock got hit pretty hard last month, so you're starting to see some recovery, up 8%. Zeta, all right, we got the numbers. Stocks up 5. They came in at 3 cents of EPS. The street thought they would lose 3 cents. That's a 200% beat. And revenue 443, which is up 44% year over year. Expected was 420. I thought it would be closer to like 430. So not 50% year over year growth like last quarter, but pretty damn close at 44%. The stock was already up 8% during the day. So the fact that it's getting a continued move after hours, we'll try to get some deeper numbers, very close to 26. Not horrible to see here.
If you want, I'll send you the link to go and check the SpaceX earnings update.
Yes, please do.
I already did.
I love Neil, dude. I
It's
love
the
him.
nerdiest thing I've ever heard.
Okay, hold on. Let's get some coverage real quick on SpaceX, then we'll get deeper into the numbers. AMD again, guys, is in 10 minutes. Not out yet.
$7.8 billion for revenue. That was versus estimates of $6.9 billion. GAAP loss of 9 cents per share. We're not going to compare that to estimates, at least not right now. Adjusted EBITDA, $3.5 billion. Let's break this down by segment, at least in terms of the revenue. Space segment, which is rockets, space flight, $962 million. Not only an acceleration from Q1, but much better than expectations. Connectivity, which is the Starlink business, $4.92 billion. A very big beat on the top line versus what the street was expecting here. And of course, that's key to watch because that is the cash cow, the profit engine for SpaceX and the AI business. Also better than expected on the top line, $2.56 billion. We're going to keep going through the report here, but you can see SpaceX shares are up fractionally.
All right, so that were the headline numbers. Tanner, go ahead.
No, I was just going to say their capex was $18.37 billion. And 15.8 of that, like almost all of it, came from AI, not from space or connectivity, from AI.
There was also a typo on their press release, and now I'm angry. I'm angry about that typo. Some intern is going to get fired.
Why? What'd they say?
They were just talking. I think it's later on in the slideshow. Let's see, page 6. They were talking about that now they have 1.4 gigawatts of compute, up from 1 gigawatt in Q1 of 2026. And they mentioned 0.4 gigawatts in Q2 of 2026. I think that was supposed to be Q2 of 2025.
Yeah. Okay, so overall numbers aren't amazing. Zeta just took a hit, 25-22. So something might have been said in that report. We'll see what it looks like. CFO 2026 has been a momentous year so far, and the second quarter demonstrated the true power of SpaceX. Revenue growth accelerated across all our business segments, and we delivered strong operating leverage with significant margin expansion led by our new AI compute agreements. Our unparalleled leadership in launch, Starlink subscriber growth, new enterprise and government partnerships, and best-in-class AI infrastructure underscore our ability to drive meaningful, attractive returns. As a newly public company, we are delighted to welcome our new base of shareholders. We have $100 billion of cash, $47 billion in backlog. Again, Tanner mentioned $18 billion of capex. Yeah, I mean, the numbers aren't anything amazing, but they're also not horrible, especially given they beat the consensus. SpaceX flat right here at 124.30. Zeta, I don't know what happened right there. It was 125.60, then fell immediately. I'll see if there's any additional reporting that came out, but you had a pretty good top line and EPS beat. Sometimes a lot of this stuff ends up being sell the news, even if there's not enough of a reason. Lucid, they missed by 15% on EPS. They beat by 2% on revenue. Toast beat by 30% on EPS, beat by 2% on revenue. Open Door missed by 143% on EPS and missed by 3% on revenue. So you do have a lot of double misses here across some of these other names. Zeta right there down 5, 23.20. Micron's down a little bit after hours. Tesla's flat after hours. SpaceX now down 2. And AMD will get it soon. Tanner, anything you're impressed with on SpaceX or?
Yeah, I mean the rate of compute that they've added quarter over quarter is just insane. You can see X has not been the most exciting place as they're losing revenue year over year. Well, declining in revenue year over year. Yeah, I'm just looking through this. They've added actually a lot of details. It's broken down like almost an individual income statement per segment, which is kind of nice to see each segment of SpaceX. The CapEx is a pretty unbelievable line item here, though. I think they're not building out a Colossus 3, but they want to expand Colossus 2, if I'm correct, Jose. They want to get that to like 2.4 gigawatts or something eventually.
Yeah, I know it was north of 2. I don't know where it goes from there.
Yeah.
Pinterest down 4%. They beat by 90% on EPS, beat by 3% on revenue. This actually had a really good reaction last quarter. This quarter down 5. Honestly, all the advertising plays, even Google initially, took a hit. Meta, Reddit, So you're not seeing the advertising names get a lot of love, but Pinterest right there down 5. Snapchat ended up doing 10% yesterday. SpaceX now down 3. Zeta's down 8. Street's not fully loving it. Spies flat after hours, and then AMD in about 4 minutes. ANET and ALab. Jose, any reason you think those two are getting love after hours?
I was just looking at Astera Labs double B. I mean, adjusted earnings per share 80 cents versus 69 cents estimate, and revenue was 392 million versus 360 million. I mean, that gets me excited because Astera Lab really focuses on kind of scale up approach, which is very important. I mean, both of these kind of are really crucial players in the data center space. Obviously, different markets. ALab more kind of like scale up. Arista more like in the networking solution of data centers. But if both of these are seeing positive numbers, I think it just gives you kind of this whole picture that the data center space is still pretty healthy, and we're still outperforming. So probably later tonight, I will be looking deeper into Astera Labs, but everything looks good for the semi space.
Rocket Lab. I've had a theory that the space names truly follow SpaceX for whatever reason the algo puts them together. And you're kind of seeing it here. Rocket Lab down 3% with SpaceX down 2%. ASTS is down. I mean, if SpaceX goes down, it just feels like this other space names end up taking the hit. AMD, we should be getting in 2 minutes. And then we're going to see Tanner, Neil, Jose, any last thoughts on AMD before we get the report?
Nothing on AMD. No, I'm looking at Upstart right now, up 9%, 10%.
Did we get a double beat on Upstart? I think we did.
Yeah, the report looks really good. They increased their originations by 50% year over year. Total revenue went up 42% year over year. Their net income positive, which they haven't been for a very long time. So similarly to SoFi, they're seeing a real opportunity to lend right now, you know, opposite of maybe some consumer fears that some people were worried about earlier in the year.
Okay, 1 more minute, folks. Put in the chat, pump or dump. What do you think for AMD? Stock's up 150% year to date. The CPU cycle has turned into a super cycle in the age of agentic inference. And Lisa Su's long-term target is $20 of EPS by 2030. So it will be up to the street to see how close they can get there on this earnings.
2030 being the long term. I think 2028 is the early term, and I think they're actually going to get closer to it in 2028 than in 2030.
Okay, we should be getting the results in about 10 seconds.
Is it 15 or 20?
No, I'm pretty sure it's 15. It's always 15. Well, we'll find out. I'm pretty sure it's 15. Okay, stock goes down 3 on the initial results. Don't have them yet. Stock goes down 4, 493. Just lost 500. Stock's down 6. Let's see if it recovers. It did the exact same thing last time. Went down almost 5-7%, then came right back up and ended the day up 20%. It's trying to recover. Do not have the results yet. Okay. AMD revenue 11.54 billion versus 11.3. That's a beat. Adjusted EPS 166 versus 162. That's a beat. Adjusted operating margins 27% versus 26.9. That is a beat. And CapEx, they are spending 808 million versus 298 million. That is also a beat, but that also means they're spending a lot more on CapEx. They beat by 3% on revenue, 2% on EPS. EPS is up 246% year over year. Revenue is up 50% year over year.
That CapEx spend seems really freaking high, no? That's like 2.5x more than what was expected.
Correct. Which maybe means there's a big opportunity for them to go after. But the initial reaction of the street is obviously feeling like this was priced in. Adjusted operating income was 3.09 billion versus 3.01. That's a beat. A net income was about 2.2 billion. Revenue for Q3, they guided to 13 billion plus or minus 300 million, which is more than the 12.5 billion estimate. So that is a beat. Management expects data center sales to accelerate further in the second half of 2026. announced major AI infrastructure launches, including Helios rack scale systems. Their client and gaming revenues up 6% year over year, 3.8 billion. Embedded revenue up 19% year over year, 977 million. Non-GAAP gross margins of 56%. I mean, you've got decent numbers. It's just maybe the stock was trading at a high multiple. Jose, any thoughts on the initial reaction?
Yeah, I mean, I think people are going to be questioning that capex, and one thing that we are seeing right now is a lot of these semiconductor companies are making long-term contracts for data center power, right? I think they made a kind of a partnership with I forget what company just a few weeks ago. I wonder if that's kind of falling into that. But it's something that all these players have to do. I mean, we see NVIDIA kind of do it with the Neo Cloud players. We see Broadcom do it. We see Google with their CPU segment do it, where you have to not only lock in sales, but you also need to lock in power and kind of a data center real estate for your customers. So I wonder how much of that is going to be impacting CapEx, and hopefully we get some clarification during the earnings call.
Tanner?
I'm just looking through the numbers. I hope this is not an indicator to what is expected from NVIDIA as well. They're a little bit different in their pricing, but this is a strong reaction to what came in as a double beat.
It's taken a lot of the semis down with it after hours as
Yeah.
well. Let's get a little bit more coverage here.
Down about 10%. Some of that might have to do with just the data center revenue. That did drive a lot of the beat, but it came in at $6.7 billion. When I was going through some sell-side research notes, the whisper number, a lot of them were expecting it to hit roughly $6.7 billion. That's specifically CPUs and GPUs, which drives roughly 58% of their business. As for the guidance, too, that midpoint guide for Q3 revenue coming in at $13 billion. The street was anticipating $12.5 billion. So could possibly be that as well. Just you can see some of it rebounding, but perhaps it was just the guide not being big enough and the data center revenue not being big enough as well. All right.
Guys, SpaceX is feeling it now. I mean, both SpaceX and AMD, my goodness, 9%. That's taking away the entire print it had this morning.
And Zeta.
Zeta, I'm still trying to figure out exactly what's happening. We'll go through their numbers, but Street obviously didn't like it. Everything high beta after hours, even Palantir taking a little bit of a beating right here. Micron down 2%. Applied Optoelectronics had a massive day. That's down 2%. I mean, AMD and SpaceX, you just can't have those two large caps go down 10% and not have the market react.
Upstart's up 10%.
Upstart is up 10%. We might need a lot of loans if.
Yeah.
Neil, you've been in AMD for a while. Your initial reaction, if this makes sense.
Does the reaction make sense? I don't know, but again, it's already a $840 billion company right now. It was up 7%. We're now down 9%, so we're basically back to where we were maybe a couple of days ago.
Yeah.
But again, the earnings call has not started yet, so we might get a little bit more. We'll probably get some info why CapEx has increased by so much, although the number itself is not big, but it is a big difference compared to what we're used to. But yeah, all the rest here, they're growing. They're growing fast, and maybe the market was expecting a little bit more growth in the data center, although they clearly say here that they expect data center revenue to accelerate in the second half of 2026. So yeah, maybe it was priced to perfection. That's the only thing I can see right now. Maybe it is priced to perfection. And yeah, these things happen. It's a good report.
Lisa Su said, we delivered an excellent quarter with record revenue and profitability as data center revenue more than doubled year over year. We entered the second half with strong momentum as EPYC demand accelerates, Instinct's deployment scale, and Helios begins to ramp. More broadly, AI is driving a significant expansion in demand for compute across all of our markets, and our leadership portfolio and growing customer visibility position us exceptionally well to capture this expanding opportunity and deliver substantial revenue and earnings growth in the year ahead. Tanner, do you know how much NVIDIA spends on CapEx, and have they ever had like a 2.5x increase in a quarter?
No, I think they spend like 1.5 billion, something like this. But at a much larger scale, like if I were to take a bet, I'm sure their CapEx as a percentage of revenue is much lower, but it's not really increased too much. I think it was 1.2 billion before. It's now 1.5 billion, somewhere along those lines.
So why is NVIDIA spending 1.2 billion on CapEx at their scale, and AMD is basically saying they're going to spend the same amount at $1 billion?
My
Like,
understanding
that's-
is Nvidia, like a lot of their capex is like office buildings and stuff like this. They just need more headcount. I don't know. Maybe AMD is ramping so much that they are expecting a large increase for need for engineers and sales and marketing. And
But
you
but
know.
you don't think their capex is going into like the other parts of the semi stack? That's not what they spend capex on, correct?
I don't know AMD nearly as much as a Jose would or something like this.
Yeah, I would say the other thing is this is the first time they're coming up with a rack scale solution. So capex sometimes due to R&D, it also fluctuates a lot. So right now they might just have a lot of engineering workforce really focusing on that part of design, making sure this rack scale ends up. I wonder how much of this can be put into whatever they might be trying to lock in with supply or something happening in the supply chain space. There's so much happening with AMD right now in kind of like the Helios rack that, again, hopefully we get clarity, but I'm going to guess it has to do something with that.
I think that will be the biggest question on the call. And maybe if they say like we're spending more on capex because demand is just so crazy. I know they've already said that, but maybe, I mean, that happened, I think 3 quarters ago, where the call itself kind of changed the entire reaction to the stock.
Mm-hmm.
So maybe Pinterest down 7, Zeta down 9, SpaceX down 6, AMD now only down 4, trying to make somewhat of a comeback here, still below 500. Bookings, that's up 6.5. Consumer seems to still be not in a horrible spot. They beat both on the top and the bottom. The win also beat on the top and the bottom, beat by 27% on EPS, beat by 1% on revenue. Win Resorts is up 4% after hours as well. Okay,
Upstart
AMD
was up 14%.
Upstart has had some pretty massive earnings, like price action moves over the past couple of years, right?
Yeah. Yeah. To the AMD bulls, though, I'm looking at these numbers. They don't actually look that bad, and I don't expect that the midterm or long-term guidance has changed at all in terms of the CPU market growing at 30% or some of these comments. And if that's still in place, then do you have anything to fear here? Is anyone looking to sell, or does business remain as usual?
Business as usual.
Yeah, I mean, the real story for them is truly the Helios and the full rack solution, right? And we don't get that until September of 2026. What I think investors were expecting for today was maybe a higher acceleration in the CPU story, since we are getting kind of a lot of these CPU shortage. Maybe we didn't get kind of that story on the CPU just yet. But if you were here kind of expecting kind of a growth for the MI355, I don't really think Lisa Su was, or anybody should be, Lisa Su didn't promise that, and I don't think analysts or anybody were really projecting that. And we see that with kind of expectations or guidance beating expectations by nearly $700 million. So I think the CPU story was the low-hanging fruit for them. And even myself, I was expecting maybe a little bit more growth in the CPU in the short term, but the long-term story is still pretty exciting.
Yeah, because the client segment only increased 22.5%, which is a deceleration in growth yet again from the 25.7 the quarter before, 33.9 the quarter before that, etc., etc. So maybe that's a reason, right? If you combine then the total client and gaming revenue segment, that's only up 6% year over year. But then again, the gaming segment is down 30%. So that's why. But data center is up 107% year over year, and like Jose said, it's a second half of 2026 growth acceleration story going into 2027. Like if you have such a huge new product launching in the back half of the year, don't expect triple-digit growth across the board just before it.
Jose, did you expect the data center beat? I get the argument about in the back half of the year it should be better, but did you think it should have been a bigger beat than a couple percent?
I did, just because the CPU story, right? That has definitely been a story that we've been hearing from a lot of players, and one of the biggest CPU player out there right now is AMD. And we've heard that they've been making great partnerships and contracts with TSMC. They're trying to expand capacity there. We had Intel, I think, a week or 2 weeks ago, kind of give us a very strong story in the CPU space. So I was expecting a little bit bigger beat just because of that low-hanging fruit. But I don't think it changes much for the long-term story. And
yeah,
I was also doing some research on the CapEx, and it was driven a lot by the Helios rack solution, which is bringing a significant upfront in infrastructure investments.
Yeah, I think if you're a massive AMD bull right here, first of all, maybe the stock comes back. 5% is pretty normal for AMD. But second of all, it's like nothing in these numbers shows anything has changed the long-term trajectory of the stock. It's already up 150% for the year. So if it's going to chill out a little bit on the earnings day, I don't think that changes anything about the long-term story right here. And maybe the call changes the narrative as well. But that CapEx should be beneficial too. That CapEx should lead to growth. That's not a doubling of CapEx just for the hell of it. But top line metrics
when you put things into perspective and you look at NVIDIA's growth, then yeah, you kind of look at AMD and like, that doesn't make much sense, right? Because NVIDIA grew at 80% last quarter on, what was it, Jose? 30 plus, close to 40 billion or more, I don't know. And now you have an AMD growing at these numbers, so you can say the argument could be, oh, why pay the premium?
Yeah, and maybe the market's just not willing to pay that premium at the moment. Tanner, go ahead.
Oh, no, I was just going to, after you were done, I was just going to say NVIDIA grew 85% on, well, last year it was 44 billion, but brought it up to $81 billion this quarter.
Okay. Okay, real quick on Zeta, a couple more updates from them. They've increased guidance across the entire board. Adjusted EBITDA, they increased guidance for the year. Top line revenue, 1.78 to 1.824 billion, up another 40 million for the year. Increased free cash flow guidance, increased full year GAAP EPS from 7 cents to 11 cents. Not really sure what the street's upset about. I think AMD and SpaceX kind of took a lot of life out of the market by falling as much as they did, but beat and raise, 44% year-over-year growth, profitable, and raised all the guidance they needed to raise. So honestly, it could have just been a sell the news on a massive rally across the entire market that happened today that now is kind of getting sold off after hours. Here is Stacy from Bernstein on these AMD numbers.
Back of, and I still think as strong as the Q3 outlook is, I still think the big AI ramp with Helios really is a Q4 story. So I still think there's that to look forward to. So I think it's just a little bit of heightened expectations post Intel, but overall, as far as I can tell from, at least from the first glance, it looks fine to me.
You think we'll get some good indication on Helios and how much they expect to ship?
I don't know if they'll give us numbers or not, but at least qualitatively, yeah, I'd expect them to sound pretty good. I mean, you know, they had an AI, they had advancing AI, like almost like an analyst event a week or two ago. And we got a little color there. I mean, they sounded very positive. It should be. I think it should be very positive. Should be fine.
Can the Helios stack actually chip away at NVIDIA and its position in the market?
Well, be careful about chip away. Like, are they taking share? Are they growing? Sure. I mean, they're going from not very much to hopefully a lot. At the same time, it's not like NVIDIA and frankly, like everybody isn't growing. I mean, and I think I've said this here a number of times, but I still feel like the right question is not so much who's winning or losing. Is the opportunity still big or is it not? I think if it's big, everybody should be doing great. And frankly, that's what we've been seeing right now. But I do think there is an opportunity for AMD here to go from what's been, you know, good results, but still, you know, not where they could be, to having a real inflection as the MI450 and the Helios rack starts to ramp into next year.
So as we see Intel and AMD compete on the server CPU side, Stacey, you're saying it doesn't really matter. Like there's enough demand at this point where all the boats will rise.
Well, so those comments I just made were on the GPU side. On the CPU side, I mean, demand is so strong. Everybody's just shipping everything that they can possibly make. And you take Intel, for example. Intel, by their own admission, their products right now are not as competitive as they want them to be. It doesn't matter. Like customers are buying them anyways. A couple quarters ago, they actually had 200 basis points of margin upside because they sold previously written off products, stuff that they didn't think that anybody would want to buy, so they wrote them off. Customers said, "We don't care, we'll take them." That's how strong demand has been. And I would say AMD actually has products that people actually want to buy. So I'd expect that to be pretty good for them.
What's your first question on the conference call?
I think the big question is, they said data center is going to accelerate into the back half. So, I mean, trying to get some color around what that acceleration looks like, the timing, the real timing of the Helios ramp. I think they've kind of said maybe end of Q3, but what does that look like into Q4 and next year? How much revenue do they expect from Anthropic, and what could that add to the numbers next year? And frankly, I'd also like to know about client, frankly. I mean, we've had client a little bit below like where the rest of the street is. I think I've been very nervous. Intel kind of talked about their PC revenues kind of taking a dive into the end of the year. And I would like to know the shape of that and how AMD feels about that. Although I feel like data center is strong enough where people probably don't care as much, but I would like to know.
All right. All good questions. Stacy, thanks for your take. Appreciate it. Stacy
Amit,
Rasmussen.
we got SpaceX call on. Do you want to listen to that for a bit or no?
I think we should. I think we definitely should. It's on the...
Okay, I got it here.
You got it? Okay.
Yeah.
All right, guys. SpaceX, 30 minutes. Then we get into AMD, and we'll keep updates on in the chat.
Up 191% from 1.2 billion. Now I will hand the call over to Elon for his opening remarks.
Good timing.
Thank you. So it's been another milestone year. Thank you. So it's been another milestone year for SpaceX so far. We're making great progress developing a fully and rapidly reusable, reliable rocket with Starship. We're connecting millions more people with Starship. We're connecting millions more people globally across 170 markets with fast, reliable Starlink internet. We're building AI compute capacity at scale faster than anyone else, we believe. And we're significantly improving our AI models, most notably with the release of Grok 4.5 last month. And now I'll dive into each of those topics separately. So with Starship, we completed 2 successful flights of Starship B3 in the past 90 days. Flight 13 demonstrated core capabilities necessary to achieve an orbital mission and return to Starbase for catch. And on Flight 14 will be our first flight to fly our version 3 Starlink satellites, our communication satellites, to operational orbit. We will try to actually catch the first and the second stage of Starlink V3 this year, and we could possibly catch the ship as soon as the next flight. It's difficult to actually explain to most people just the incredible significance of Starship. And I think perhaps describing it in terms of tonnage to orbit is a good way to appreciate the magnitude of the impact Starship will have on the future of civilization. So right now, we deliver roughly 2,500 tons a year to orbit via Falcon. And this is a big number by normal standards. The rest of the world, I think, delivers around 300 tons. So we deliver 80 to 90% of total Earth mass to orbit per year with Falcon. Now with Starship, our aspirations, and I think we will achieve these aspirations, are to deliver well over 1 million tons to orbit per year, and probably ultimately 10 million tons per year. So this is not like if you had a chart where you plotted things, you would need a very, very big table to put the chart on to see, to even see any of our competitors on that chart, and to make that. So our next biggest competitor was 1 pixel high on the bar chart. You would still need a very big bar chart to represent the SpaceX Starship vehicle. And it's worth noting that we actually encourage our competitors to copy us. We do nothing to slow them down. We actually launch competing satellite constellations at the fair prices, the same price we charge everyone. So we do encourage our competitors to copy us, but it's quite difficult to copy something like Starship. But we don't use patents as sort of a landmine exercise to stop people from copying us. We actively encourage it. So, anyways, but when you think about it on that, so, we go from 2,500 tons a year to, 1 million, potentially 10 million tons per year. It's really a ridiculously profound difference. But that is our plan, and I think we will achieve that plan. Regarding Starlink, it's also worth just noting that the Starlink V3 satellite is about an order of magnitude more capable than the Starlink V2 satellite, which was already a very capable satellite. And we expect to launch about an order of magnitude more Starlink V3 satellites. So that would mean a roughly 2 order of magnitude increase in the delivered bandwidth. Even if our monetization per bit dropped by a factor of 10, that would still mean a 10x increase in the revenue of Starlink. So I think people are really underestimating Starlink here. So this is a big deal. It's kind of hard for people to wrap their minds around this, but it's not out of the question that at some point Starlink will deliver a majority of the world's internet, at least in countries where we're allowed to operate, which is the vast majority of countries. So this is important to bear in mind, and it's not in like the infinity future. It's less than 10 years. With the advent of AI and humanoid robotics and vehicle robotics and just a massive number of robots, the appetite for bandwidth will be much greater than it has been in the past. You think of a human consuming perhaps or producing perhaps about a few hundred bits per second of output, and actually the average human is outputting less than 1 bit per second over the course of a day, which is 86,400 seconds. Now, computers, could easily do billions of bits per second continuously over a 24-hour period. So this is why I would expect the appetite for bandwidth to grow dramatically with the growth of AI and robotics. And really, I think Starlink is the only thing that can actually service that bandwidth. Regarding AI, we're making rapid progress on Grok, because Grok 4.5 was a huge improvement. And we have Grok 4.6 coming out probably next week. And then Grok 4.7 is about 3 or 4 weeks from today. And we expect the cadence of AI development to improve dramatically. And then with Grok 5, which should be out before the end of this year, we will be incorporating the entire corpus of SpaceX data, basically all the data that SpaceX has ever produced, which is a tremendous amount over the course of a quarter century, will be incorporated into Grok training. And we think this will make Grok by far the best engineer. So these are all like very, very big things. In addition, of course, we are providing compute to others, and we are building and deploying compute, I think faster, or our rate of growth certainly is faster than anyone else. And our efficiency of compute deployment, I think, is also the highest. So we expect to end this year with over 2 gigawatts of compute. And probably our cumulative compute online by the end of next year will be several times higher. So it may, let's say, be closer to 10 gigawatts of compute than 5 gigawatts of compute. That's a way to think about it. And going forward, we've decided to build exclusively on NVIDIA because we think the Vera Rubin architecture is the best architecture. We think it's the best AI computer, and we greatly value our close cooperation and partnership on many levels with NVIDIA. So we're exclusive to NVIDIA. And this new capacity coming online will obviously further benefit the development of Grok, as will our Cursor acquisition, which should close quite soon. I think we're through almost all of the regulatory hurdles. And then with respect to the StarMind AI satellite, which will be essentially an optimized Vera Rubin NVL72 computer. This is not some sort of far future distant thing. We expect to start launching these next year, and we think the design of the NVL72 VR computer is a much better design than is typical, than say having a standard rack style design, and so we expect to actually deploy this on the ground as well as in orbit, because we think it's going to be a radical simplification of the normal NVL72 rack. It will cost less. It'll be more effective. And so if we're going to put it in space, why not put it on the ground? So I think that's going to be pretty cool. In conclusion, the SpaceX team is solving some of the hardest engineering problems in the history of humanity. And I think the team is succeeding because I think we've got, in a lot of ways, the smartest, most dedicated team of humans that has ever existed. I'm incredibly proud to work with such a team, and I'd like to thank the team for their incredible hard work. And also thank you to investors who have supported us along the way.
Thanks, Elon. We had an exceptional second quarter, and today I'll focus on the operational and commercial highlights, as well as the initiatives we are prioritized going forward. Starting with our space business, we remain the leading launch provider globally, with 78 total launches and 1,041 tons of mass to orbit delivered in the first half of this year, primarily allocated to our own internal Starlink missions, but with great customer missions as well. While our launch capabilities are key to supporting our connectivity business, we continue to have a very robust commercial manifest and a very robust and growing U.S. government mission demand, which drives revenue for the segment. We're currently launching at our highest Falcon cadence and are on the precipice of operationalizing Starship. As Elon said, the first two flights of our V3 Starship vehicles put us in an excellent position to achieve our near-term goals of reaching orbit, catching and reusing the ships and boosters, and deploying our V3 Starlink broadband satellites. Speaking of which, Starlink had a standout quarter driven by continued growth across our consumer, enterprise, and government businesses. During the second quarter, we added net more than 1.7 million Starlink subscribers globally, consumer. This reflects our best quarter of new customers to date, an increase from the 1.4 million we added during the first quarter. We achieved this by holding ARPU, which is the average revenue per user, stable at $66 per month compared to the first quarter. We ended the second quarter with service availability in 167 markets and have continued to activate new markets since then, with some very exciting announcements coming soon, maybe even as early as today. As of June 30th, our constellation of operational Starlink, broadband, and mobile satellites in orbit grew to roughly 10,200, with our 9,600 broadband satellites delivering roughly 800 terabits per second of total downlink capacity. Following a successful speed run test of the V3 Starlink satellites on the most recent Starship launch, during which we connected every satellite through every laser link, we intend to deploy V3 satellites into the constellation for operational use on the upcoming Starship missions. The significant amount of capacity we're able to add to the Starlink constellation from the V3 satellites will enable us to continue providing even better service. I think it's pretty great already, but to do so while serving more and more customers over the world. In fact, in the years ahead, we expect Starlink will represent a significant portion of global internet traffic, which Elon also talked about. We also see significant growth opportunities for Starlink in enterprise and government, on the enterprise and government side of the business. We believe revenue from these markets have the potential to reach a scale at least comparable, but likely exceed our consumer business as we continue to gain share. In the second quarter, we signed a major agreement with American Airlines, as well as activated our service with new partners, including Southwest, Virgin Atlantic, Iberia, and Aer Lingus. We have become the provider of choice among major airlines with outstanding customer feedback, but still have significant room for growth. In fact, we heard from one of our airline customers, shockingly, customers are flying shorter hop flights instead of direct, so that they could ensure that they're on a Starlink activated flight. They'd never seen this in the business before. On the government side, we won more than $6 billion in U.S. contracts in Q2, supporting major Space Force programs that offer our nation mission-critical communications and sensing capabilities, and we see even more room for growth in this sector in this coming year. In Q2, we also launched the new Starlink mobile partnerships with international carriers, including SoftBank, NTT Docomo, and Spark New Zealand. Our near-term priority is launching mobile V2 satellites on Starship ahead of integrating the 65 megahertz of EchoStar spectrum later next year. This spectrum transfer was recently approved by the FCC and represents a foundational competitive advantage for Starlink Mobile. In AI, the industry is hurtling towards ever more compute demands. We're rapidly expanding our compute capacity to meet our own needs as Grok expands, as well as those for other leading companies such as Google and Anthropic. In terms of our own Grok models, the enterprise feedback on rollout of Grok 4.5 has been very positive so far. Token consumption tripled out of the gate after the July release, and we continue to see strong signals on usage and monetization for the model. We're looking forward to welcoming the Cursor team to SpaceX to integrate our engineering and begin to benefit from a combined sales capability. In review, our momentum as a business is extraordinary. Our engineering teams are scaling Starship and our next-gen satellites, while our sales teams expand Starlink, aviation, mobility, and global markets. At the same time, we're bringing on additional compute capacity and expanding and deepening our AI partnerships across a broader set of customers. And though I've been in this business for 24 years, I could not be more excited about the months ahead with all the exciting and amazing things going on. It really feels like we're just getting started all over again. Now I'll turn the call over to Brett.
Thank you, Gwen. We demonstrated strong results in Q2. Revenue growth accelerated across every segment. We narrowed our net losses by nearly half, and on a year-over-year basis, and we grew adjusted EBITDA meaningfully faster than revenue. Importantly, we significantly strengthened the balance sheet through our IPO and inaugural investment-grade bond offering. The combination of our global launch leadership, recurring Starlink revenue, and rapid growth in AI infrastructure continues to drive improved operating leverage. Now I'll walk through the financials for each segment. For the space segment, revenue grew 55% sequentially and 29% year over year to $962 million, driven by a higher number of larger customer launches and a favorable customer mix. Segment costs and expenses rose $389 million year over year, and we continued to accelerate R&D investments in our Starship program. Starship aims to quadruple payload capacity and reduce launch costs by 10 times compared to our Falcon 9 rocket, unlocking significant capabilities across all of our business segments. We continue to make progress building the infrastructure required to support thousands of Starship launches per year, including accelerating Raptor and launch vehicle production, the build-out of our gigabays, and making significant progress towards activating multiple launch pads at Starbase and in Cape Canaveral, at Pad 39A and Pad 37. Space adjusted EBITDA was a loss of $205 million for the quarter, primarily reflecting these higher R&D expenses. Moving to the connectivity segment, revenue was up in the
Okay, we got 9 minutes until AMD. I feel like we just talk because there's nothing we're gonna. What do you guys think of Elon's opening, Tanner?
Exclusive to NVIDIA. Did you hear anything else? I mean, come on.
I mean,
No, I
NVIDIA
fell
got a
asleep
pump.
after 2 minutes.
What's that?
I fell asleep after 2 minutes. What did he say?
Let me get the exact quote. I tweeted it.
He said,
Go
ahead, go ahead, you got it.
We expect to end this year with over 2 gigawatts of compute, and probably our cumulative compute online by the end of next year will be several times higher than that. Think closer to 10 gigawatts of compute, but between 10 and 5. That's the way to think about it. Going forward, we decided to build exclusively on NVIDIA because we think that the Vera Rubin architecture is the best architecture. We think it's the best AI computer. We greatly value our close collaboration and partnership with NVIDIA, so we are exclusive to NVIDIA.
I think that was deliberate. I think he said that because he knows, they can get a lot more NeoCloud deals if they exclusively build on Vera Rubin as well. And so he's doing Jensen a solid because he knows Jensen will probably pay back the favor to him.
Yeah, I also think he's getting good prices on the chips versus other competitors, but
100%.
And then, I learned about a new airline as well. I didn't know there were, that killed me, guys. I don't know about you. I'm a child at heart. I didn't realize, but yeah. Government of Ireland.
By the way, apparently Elon really likes NVIDIA. SpaceX has committed to, he just tweeted this, SpaceX is committed to using NVIDIA GPUs exclusively because they are the best.
So he's definitely getting good prices. He's definitely getting.
Dude, Jensen's giving him a hell. Is this bearish NVIDIA? Is Jensen giving him a hell of a discount for? He's like, you don't tweet that just for the hell of tweeting that.
No, he's not even giving him better pricing. He's just giving him more chips at the same price. It's
Honestly,
just
that's probably how it's happening.
Did the same thing with Micron. He's just buying favor with his words.
The problem is he's not saying AMD.
No, and that's actually a bigger problem because XAI used to actually be a customer of AMD. I think the MI300 series, we did see XAI actually be part of some of their AI events.
Isn't AMD an investor in XAI?
Yes, they are. So that's it's weird how this works.
Like
wait, so
that
means AMD has a stake in SpaceX then? How much is it worth? Can someone find that out?
It's like Lisa Su hearing and seeing Elon tweets like, "Hello, you remember me?"
That stake, it has to be something here if they're in XAI. But yeah, the fact that he's exclusively talking about NVIDIA here.
Food reviewer in chat said terafab, by the way. I mean, it's true. SpaceX is a nice company to get an exclusive comment from. They just put up $18 billion worth of CapEx, 15 point something of which came directly from their AI segment. As they continue to expand, they've got something like $94 billion in cash, $95 billion in cash, all of that, of which the chips will go to NVIDIA. The networking will go to NVIDIA. That's pretty exciting.
Yeah,
how are they paying for Cursor? Only stock?
I think so, yeah.
Okay. So how will they pay for Tesla? Also stock or stock in
They're
cash?
not. That's a later conversation. Let's worry about today.
There's 900 million shares getting unlocked in the next 2 days.
You get stock. You get stock.
Elon's the Oprah Winfrey of financial markets.
I don't know, man. It looks ugly. That much, 1 billion shares coming online. And then you've got the market obviously not being impressed at all with these results. I mean, I don't know.
Oh, man. Someone should have said half cash, half stock.
Did you bring that up to him, Amit?
To Elon?
No, to Ryan Cohen.
Not to Ryan.
Oh, to Ryan. I think I mentioned it in the call, but then they had to dilute by another 1.9 billion. I mean, like it's hard to use your cash or use your stock. Like at some point, you actually need more cash there. Okay, AMD's in 4 minutes. Put in the chat if you think AMD can reverse Do you guys here think there's a shot? 7% is a lot to climb up, but do you think there's anything they could say to reverse this?
So we're gonna
Yeah.
sell our SpaceX position to.
Yeah, if they say something like OpenAI just decided to go exclusive with AMD, which won't happen, but
Yeah, it will never happen because Jensen is basically bankrolling their whole business.
no, there's not going to be a lot of exclusive AMD deals, but that doesn't mean that there's not still a lot of business for them. I was going to say picking up the scraps. I'm not trying to be rude. It's just they are smaller. They have a lower market share, but that doesn't matter.
So here's a stat for you. NVIDIA, Tanner probably knows this, but once again, this is just to highlight the multiple AMD is trading at versus their cash flows. NVIDIA does 35 billion of free cash flow in Q2 or Q1. AMD did 1.6 billion in Q2. So AMD is trading at triple the multiple and doing 35x less free cash flow. I mean, it's just one of those things where it's a great quarter. It's just, the stock's trading at a high multiple and needed to be absolutely exceptional for it to make a move today. But maybe they say something in the call and you get the reversal.
And I mean, when you really look at it, we are literally back to yesterday's prices.
Yeah, exactly.
So
yeah.
But maybe you have a point. Maybe we should pivot from AMD to NVIDIA. Jose is already like, excellent.
I'm okay with. It feels like a cheat code owning both. It feels like a cheat code because obviously with AMD, right, you don't have the numbers now, but you do have that Helios rack inflection. Just kind of like Stacy was mentioning when we were listening to him. Right, it's that massive shift that's going to happen when the Helios comes out. Right now, you're only growing at what 20-30% or whatever number they're growing. It's going to be completely different when you really see that Helios ramping up.
But you know what she's going to say, right? High double-digit growth.
Can she say low triple digits for one time?
I mean, that is a solution though. If you like both, you own both. It's not that it doesn't have to be so competitive, right? And I think that's what Jose's done for so long as well. Jose, do you think they're going to say anything about China that's important or no?
I don't think there's much. I don't think there's much appetite from investors on that right now. So I don't think we will hear too much. We don't really hear much about them except if they sold some of the MI325s. But I think there's plenty of appetite and questions about US-based customers that I don't think there's too much focus on that space.
Okay, Arista still moving. After hours, Zeta trying to get a little bit of recovery. Arista up 12%. Bookings up 6%. Pinterest down 8%. Maybe their users decline. Something every quarter tends to get the street upset about that. We'll look at that. Upstart's up 13%. Astera's now flat. Astera came all the way back down. Open Door is down 7%. Do we still have any Open Door bulls left? I know this one was supposed to go to $82, but you kind of have to make a profit before you get there.
Yeah.
Zeta's down 5%. Win's up 7%. Win in bookings, one of the big. I mean, Kratos, bro, wasn't this thing up 20? Or like at least 17, and now it's right back down, red. And then AMD and SpaceX still down on the day. All right, this call is going to start in 20 seconds, and I'll flip to it. The call is going to be pretty boring for the first 20, 25 minutes. It's purely financials, and then why are you laughing?
It's just such a long period of. It's going to be boring for the first 45 minutes, and then Q&A is going to come in strong at the end.
Yeah, it's not the most exciting thing, but once they get to Q&A, that's what matters. So it'll take a minute to get there, but it should happen in about 30 minutes. All right, here we go. Call is starting live.
Quarter 2026 financial results conference call. By now, you should have had the opportunity to review a copy of our earnings press release and the accompanying slides. If you have not had the chance to review these materials, they can be found on the Investor Relations page of amd.com. Today, we will refer primarily to non-GAAP financial measures during the call. The full non-GAAP to GAAP reconciliations are available in today's press release and slides posted on our website. As a reminder, our second quarter 2025 results included approximately $800 million of inventory and related charges associated with U.S. export control restrictions on MI308 shipments to China. Unless otherwise noted, comments making year-over-year comparisons exclude the impact of those charges to provide a more comparable and meaningful view of our underlying business performance. Participants on today's conference call are Dr. Lisa Su, our Chair and CEO, and Jean Hu, our Executive Vice President, CFO, and Treasurer. This is a live call, and we will be replayed via webcast on our website. Before we begin, I would like to note that AMD will participate in the following events for the financial community: KeyBank's Technology Leadership Forum on Tuesday, August 11th, Citi's 2026 Global TMT Conference on Tuesday, September 8th, and the Goldman Sachs Communacopia and Technology Conference on Friday, September 11th. Today's discussions contain forward-looking statements based on the current beliefs, assumptions, expectations, including forward-looking statements regarding financial projections, business and industry trends that speak only as of today, and as such involve risks and uncertainties that could cause actual results to differ materially from our current expectations. Please refer to the cautionary statement in our press release for more information on these factors that could cause actual results to differ materially. With that, I will hand the call over to Lisa.
Thank you, Matt, and good afternoon to all those listening today. We delivered another outstanding quarter with record revenue and profitability as adoption of our leadership products continued to expand. Revenue increased 50% year over year to $11.5 billion, driven by significantly higher sales of EPYC, Instinct, Ryzen, and embedded processors. Data center revenue more than doubled year over year and now represents 58% of total revenue, up from 42% a year ago, reflecting the rapidly expanding scale of our server and data center AI businesses. Our record results mark another clear step up in AMD's financial performance and demonstrate the strength of our product portfolio and execution. We are still in the early stages of a multi-year AI adoption cycle as deployments grow across a broad set of markets and workloads, driving demand for more compute and creating a clear path to significant revenue growth and earnings power in the years ahead. Turning to our segments, data center revenue grew 107% year over year to a record $6.7 billion, driven by strong demand for EPYC processors and Instinct accelerators. In server, we delivered our fifth consecutive quarter of record server CPU revenue, with cloud and enterprise sales each growing more than 70% year over year, exceeding the outlook we provided last quarter. We gained x86 server revenue share year over year as customers expanded deployments of both 5th Gen EPYC Turin and 4th Gen EPYC Genoa families. In cloud, hyperscalers continued expanding EPYC across their internal infrastructure and public cloud offerings, including AWS, Microsoft, Google, Oracle, and others. 5th Gen EPYC Turin now powers nearly one-third of the more than 1,600 EPYC public cloud instance types available globally, as providers broaden their offerings with new database storage and AI workloads. That expanding footprint is translating into growing adoption of EPYC in the cloud, with healthcare, financial services, media, and technology companies adding tens of millions of instances in the last quarter. In enterprise, we delivered record sales in our fourth consecutive quarter of record sell-through as on-prem adoption accelerated, driven by the leadership performance and TCO advantages of our EPYC portfolio. Growth was broad-based as we won large deployments with leading financial services, manufacturing, telecom, retail, and technology companies. More than 230 5th Gen EPYC platforms are now in market from HPE, Dell, Lenovo, Supermicro, and others, our broadest enterprise portfolio to date. Looking ahead, agentic AI is creating a new growth vector for server CPUs, spanning high-frequency AI host nodes, high-density agentic servers, and general-purpose cloud and enterprise workloads. Our 6th-gen EPYC Venice family is purpose-built for this expanding range of workloads and delivers one of the largest generational performance gains in EPYC history. Built on our all-new Zen 6 core and 2-nanometer technology, Venice extends EPYC leadership in performance and efficiency, delivering more than twice performance per watt of leading x86 CPUs and up to 3.3 times the performance per watt of leading ARM-based CPUs. The Venice family includes more than 30 processors that combine leadership per core and per socket performance with a broad range of memory and I/O configurations, giving customers greater flexibility to optimize performance, efficiency, and TCO across the most widely used cloud, enterprise, and HPC workloads. Venice is in production now, with every major OEM on track to launch platforms and the leading cloud providers planning deployments beginning later this year. Customer demand for Venice is stronger than for any prior EPYC generation, and we expect to continue growing market share across cloud and enterprise in the coming quarters. Turning to our data center AI business, revenue more than doubled year over year, driven by strong demand for Instinct accelerators. MI355X adoption continued to broaden as leading AI companies scaled deployments across a growing range of inferencing and training workloads, and cloud providers expanded MI350 series availability. At our Advancing AI event, we launched Helios, our rack-scale AI platform combining EPYC Venice CPUs, MI450 series GPUs, Pensando networking, and ROCm software. Across a broad range of inferencing workloads, Helios delivers up to 15% more throughput at the same rack power and up to 30% more tokens per dollar than the competition. Customer pull for Helios is very strong and tracking ahead of our initial forecasts. In addition to our multi-generation gigawatt-scale deployments with OpenAI and Meta, we announced a new strategic partnership with Anthropic. Anthropic will deploy up to 2 gigawatts of MI450 series GPUs in Helios, with deployment of the first gigawatt beginning in the first half of 2027. The partnership includes a multi-year joint engineering collaboration using Claude to optimize workloads for Instinct GPUs and accelerate ROCm software development. We also expanded our long-standing partnership with Microsoft. Microsoft will deploy Helios at scale on Azure for frontier model inferencing across Microsoft, its AI customers, and Azure AI services. Together, these commitments broaden the group of leading AI companies and cloud providers building their next-generation infrastructure on AMD. Helios is now in production, with initial shipments on track to begin later this quarter and ramp through the fourth quarter and into 2027 to meet very strong customer demand. Looking beyond Helios, we plan to launch a new rack-scale AI platform every year, with each generation delivering significant performance, efficiency, and TCO gains. In 2027, our next-generation platform combines MI500 series GPUs, Verano CPUs, and Pensando networking with expanded scale-up domains and both copper and optical-based interconnects. Customer engagement on MI500 is very strong, with multiple customers working closely with us as they plan their next-generation AI infrastructure. We expect MI500 to deliver the largest generational leap in Instinct history, putting us on track to increase inferencing performance more than 2,000 times in just 4 years. Turning to our AI software stack, ROCm has reached an important inflection point with the performance, capabilities, and developer experience customers need to deploy AI in production at scale. The breadth of the ecosystem also continues to expand. More than 3 million models now run out of the box on AMD. The leading open models launched with day zero support for Instinct, and open source contributions to ROCm have increased more than tenfold over the past year. We introduced ROCm.ai, our new AI-assisted development platform for AMD GPUs, last month. ROCm.ai lets developers use today's leading coding agents, including Claude, Codex, and Cursor, to create, port, and optimize code for Instinct, making it significantly faster and easier to bring new models and workloads to AMD. ROCm.ai delivers more than twice the training performance and more than 3 times the inferencing performance of ROCm 7 across a broad range of models. We are also working closely with the leading AI labs, including OpenAI, Anthropic, Meta, and others, to co-optimize ROCm for their models, with the improvements benefiting the entire AMD ecosystem. Taking a step back, the overall data center market opportunity is expanding far more rapidly than we projected just 6 months ago. As AI moves into production across a broader range of applications and workloads, demand for both accelerators and CPUs is growing well above our prior expectations. We now expect the data center AI accelerator market to grow more than 45% annually to approximately $1.4 trillion by 2030. And we expect the server CPU market to grow more than 50% annually to approximately $220 billion by 2030. For AMD, this larger opportunity, combined with the strength of our portfolio and growing customer visibility, is creating a steeper growth trajectory for our data center business. In data center AI, the growing number and scale of Helios and MI450 series Instinct deployments position the business for significant growth in the second half of the year, with growth accelerating in 2027. In server CPUs, with very strong customer demand and improved supply, we now expect server revenue to grow more than 80% year over year in the second half of 2026, and more than 70% for the full year 2027, off a much higher base. Taken together, we now expect data center segment revenue to more than double year over year in 2027. Turning to client and gaming, segment revenue grew 6% year over year to $3.8 billion. In client, revenue increased 23% year over year to $3.1 billion, driven by record mobile processor revenue and continued share gains. Commercial adoption continued to expand in the quarter, with Ryzen Pro sales growing more than 50% year over year as we closed new wins with large healthcare, technology, automotive, and financial services companies. To build on this momentum, Dell, HP, Lenovo, Asus, and others launched a broad portfolio of new commercial PCs powered by our latest generation Ryzen AI Pro 400 series processors. Demand was also strong for our Ryzen AI Halo developer systems, which went on sale in the quarter. In July, we introduced our next generation Ryzen AI Halo platform, powered by our new Gorgon Halo processor, featuring an industry-leading 192 gigabytes of unified memory and can run models with up to 300 billion parameters. And to make it even easier for developers to build and test large AI models locally, we are partnering with Hugging Face to include 1 year of Hugging Face Pro with every Ryzen AI Halo system beginning later this year. Looking to the second half of the year, we're planning for a softer PC market as higher memory and component costs weigh on demand. Against this backdrop, we expect our client business to perform better than the market, driven by the strength of our Ryzen portfolio and growing commercial adoption. In gaming, revenue declined 31% year over year to $779 million, primarily due to lower semi-custom sales at this stage of the console cycle. Gaming graphics revenue also declined year over year as higher industry-wide component costs contributed to higher graphics card prices and weighed on overall demand. Turning to our embedded segment, revenue increased 19% year over year to $977 million, our strongest growth in more than 3 years. Demand was broad-based, with strength across networking, aerospace and defense, test measurement and emulation, and communications customers. Our embedded x86 business grew significantly in the quarter as hyperscalers and networking customers increasingly adopted our CPUs to power critical networking and control plane functions in the data center. We also continued to expand our portfolio, introducing Ryzen AI embedded X100 processors for demanding real-time edge AI workloads and the Kriya AI robotics platform for physical AI. Looking more broadly, the strategy we have been executing over the last few years is now delivering strong results. Embedded x86 is becoming a significant growth driver for the segment. Our overall embedded portfolio is outgrowing the market and gaining share, and our embedded semi-custom engagements are expanding. Design win momentum also remains very strong. We are tracking towards another record year with more than 18 billion of new design wins, led by major wins with networking, data center, communications, test, and aerospace and defense customers. In summary, we delivered record revenue and profitability in the second quarter, reflecting our strong execution and the growing adoption of our leadership products. We entered the second half with strong momentum across our businesses, with Venice and MI455X now in production, initial Helios shipments set to begin this quarter, Ryzen Pro CPUs driving continued commercial share gains, and our embedded segment returning to strong year-over-year growth. More than a decade of focused investment has given us the strongest and broadest product portfolio in the industry, deep strategic relationships with the companies driving the future of computing, and a proven ability to deliver multi-generation roadmaps and ramp complex products at scale. At the same time, AI is driving demand for dramatically more compute across all of our markets. We now see the overall market for high performance and AI computing growing approximately 40% annually over the next several years, approaching $2 trillion by 2030. And we expect to grow well above the market. As a result, we are tracking materially ahead of the long-term financial model we shared at our Financial Analyst Day last November. We now expect revenue to grow substantially above our prior target of greater than 35%. And we expect to significantly exceed our $20 annual EPS target within our strategic timeframe. We are still in the early innings of a multi-year AI adoption cycle, and the opportunity ahead is enormous. We are exceptionally well positioned to capitalize on this opportunity and deliver significant growth in the coming years. Now I will turn the call over to Jean to provide additional color on our second quarter results. Jean?
Thank you, Lisa, and good afternoon, everyone. I'll start with a review of our second quarter financial results and then provide our current outlook for the third quarter of fiscal 2026. We had an outstanding second quarter, marking our sixth consecutive quarter of greater than 30% year-over-year revenue growth. Revenue increased 50% year-over-year and 13% sequentially to a record $11.5 billion, driven by continued momentum across our businesses. Importantly, data center accounted for approximately 58% of total revenue, underscoring the continued shift in our business mix and its increasing contribution to AMD's growth. On a comparable basis, diluted earnings per share increased approximately 82% year-over-year, significantly outpacing our revenue growth and demonstrating our earnings power as we scale our business. Gross margin for the quarter expanded to 56%, up over 200 basis points year-over-year and 80 basis points sequentially, reflecting a favorable product mix and a growing contribution from our data center business. Operating expenses were $3.4 billion, an increase of 40% year-over-year, as we continue to invest in R&D to expand our AI silicon systems and software capabilities to support our long-term growth opportunities. Operating income was $3.1 billion, representing a 27% operating margin. Now turning to our reportable segment, starting with the data center segment. Revenue was a record $6.7 billion, more than doubling year-over-year and up 16% sequentially. Growth was driven by greater than 70% year-over-year increase in EPYC sales, with record enterprise sell-through and robust demand across our cloud customer base. Both unit shipments and ASP increased significantly year-over-year, reflecting the continued mix shift toward to our latest Zen 5 generation processors. Instinct sales more than doubled year-over-year with the continued ramp of our MI350 series products, as adoption broadened across the largest AI labs, cloud providers, leading AI startups, national labs, and the sovereign AI deployment. Data center segment operating income was $2.1 billion, or 31% of revenue. Client gaming segment revenue was $3.8 billion, up 6% year-over-year and 7% sequentially. The client business revenue was $3.1 billion, up 23% year-over-year and 6% sequentially, led by record mobile revenue. The gaming business revenue was $779 million, down 31% year-over-year, primarily due to lower semi-customer revenue. Sequentially, gaming revenue increased 8%, driven by higher semi-customer sales, partially offset by lower Radeon shipments. Client gaming segment operating income was $582 million, or 15% of revenue, compared to $767 million, or 21% a year ago, reflecting continued investment in go-to-market activities and an expanding product roadmap. Embedded segment revenue was $977 million, up 19% year-over-year and 12% sequentially, as demand continued to improve across end markets and the new design wins began ramping. Embedded segment operating income was $386 million, or 40% of revenue, compared to $275 million, or 33% a year ago, driven by higher revenue and favorable product mix. Turning to the balance sheet and the cash flow. During the quarter, we generated $2.4 billion in cash from continuing operations and $1.6 billion in free cash flow. Inventory increases sequentially to approximately $8.5 billion to support strong data center demand. At the end of the quarter, cash equivalents, and short-term investment were $13.1 billion. Now turning to our third quarter 2026 outlook. We expect revenue to be approximately $13 billion, ±$300 million. At the middle point of our guidance, revenue is expected to be up 41% year-over-year, driven by very strong double-digit growth in our data center segment, strong double-digit growth in our embedded segment, and a decline in the client gaming segment, with growth in our client business more than offset by significant double-digit decline in gaming. Sequentially, we expect revenue to be up approximately 13%, driven by strong double-digit growth in both our data center and the embedded segment, and a modest decline in our client gaming segment, with slight growth in client offset by strong double-digit decline in gaming. In addition, we expect third quarter non-GAAP gross margin to be approximately 56%. Non-GAAP operating expenses to be approximately $3.65 billion. Non-GAAP other income and expense to be a gain of approximately $55 million. Non-GAAP effective tax rate to be 13%, and the diluted share count is expected to be approximately 1.66 billion shares. In closing, we delivered another outstanding quarter of revenue growth and a significant earnings expansion, reflecting the strength of our execution and the strong momentum across the business. As data center growth continue to accelerate, we enter the second half of the year very well positioned to deliver continued profitable growth. With that, I'll turn it back to Matt for the Q&A session.
Thank you very much, Jean. John, we'd like to go ahead and start the Q&A session now. Please do poll the audience for questions. We ask that each caller ask one question with one brief follow-up. Thank you.
All right, Q&A.
Thank you, Matt. We will now be conducting a question and answer session. We ask that you please limit yourself to one question and one follow-up. If you would like to ask a question, please press *1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press *2 if you'd like to remove a question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment while we poll for questions. And the first question comes from the line of Tom O'Malley with Barclays. Please proceed with your question.
Thanks for taking my question. Lisa, you laid out the Analyst Day $1.4 trillion TAM on the accelerator side. You laid out the $220 billion on the CPU side. But the share dynamics within those are very different. So I think the genesis of the question here is when do you see that crossover point happening in the data center GPU business and the CPU business? Is that something that comes this calendar year? And when you look at the relative contributions between those two buckets into calendar year 27, from a dollars perspective, where are you seeing the most strength?
Yeah, Tom, thanks for the question. So, look, we are certainly seeing a very, very strong compute market demand over both the data center accelerator as well as the server CPU. I think the server CPU is a little bit newer, and so we've been giving updates on that. As we go forward, certainly looking at our Q3 guide and our Q4 guide, we see very strong growth across both server and data center AI. So we're seeing server grow over 80% in the second half of the year over year. We're seeing very strong data center AI growth, and that reflects into our 2027. The way to think about it is both businesses are going to grow a lot. The data center AI TAM is certainly larger, and as a result, as we ramp the large strategic customers that we have on Helios in 2027, you would expect substantial growth in that business in 2027. But both businesses are very significant drivers of our 2027 growth and beyond.
And then maybe under that framework, with both growing very strongly into next year, maybe this one's for you, Jean. You obviously have some headwinds on the GPU side as you're ramping Helios, but also on the server processor side, you would imagine that you're getting above corporate gross margins there. Maybe as you look at the trade-offs to gross margins into next year, is one kind of offsetting the other, or could you maybe think that directionally, just given some of the tailwinds you're seeing with pricing, directionally with the mix shift to more CPUs, could you see a tailwind more so than a headwind into calendar year 27? Thank you very much, guys.
Yeah, Tom, that's a great question. Thank you for that. I think as we talked before, our gross margin is primarily driven by the business mix. We're actually very pleased with our gross margin progress in the first half of 2026 and our guidance for Q3 2026. I think the way to think about the 2027 is there are a few puts and takes. The first thing is, right, as Lisa just mentioned, our server business is expanding very significantly with the increased TAM and the pace of our business continue to grow, which, from gross margin perspective, is accretive to our overall gross margin. On the other side, you're right, the pace of data center AI ramp is also very important because from a revenue opportunity perspective, we see large incremental revenue opportunity from data center AI. Once it ramps, not only it adds tremendous revenue for the company, but also gross profit, even though the gross margin is slightly below corporate average. I think that mix will determine how we go through 2027. But overall, we actually feel good about how we can really navigate through the transition of the business and continue to improve gross margin to manage the balance of the gross margin. Plus, our embedded business is recovering significantly. We actually think the embedded business will give us additional tailwind on the gross margin side in 2027. So I feel really good about that.
Thank you. And the next question comes from the line of Timothy Arcuri with UBS. Please proceed with your question.
Thanks a lot. Lisa, I wanted to see if you could give us any color, just what's embedded in the guidance in terms of data center. So the question really is like, of the growth between Q2 and Q3, which will grow more on a dollar basis, CPU or GPU? And I ask because if I take your up 80% half on half number, it sort of implies that the server, CPU might not grow that much in Q4. So I'm not sure if I'm doing that wrong. Can you just give us some color there?
I'm just looking at that, Tim. Look, I think we believe that the server CPU is going to grow substantially in Q3 and in Q4. The way I would describe it in terms of dynamics is, we have very strong demand across all of our customers in hyperscale and enterprise, and we have been, adding additional supply as we've increased supply throughout the year. So we're guiding the Q3 segment to grow sequentially double digits. Both server and the data center AI will grow nicely within that, and then we should expect more growth for each of those businesses in Q4 with more supply coming on for server as well as for data center AI. The Helios ramp is just starting at the end of Q3, and it'll be much more substantial in Q4. So that should sort of give you the picture of we think Q3 is certainly a strong quarter as we look at the very strong double-digit growth going into in data center segment, and in Q4 it will be higher than that.
Okay, thanks. And then just as a follow-up, so relative to the TAM that you laid out at the Analyst Day, I think it's a 40% CAGR out through 2030. So do you think you can outgrow that CAGR out through 2030? So is your plan to grow your revenue more than 40% during that period? Thanks.
Yes. So as we look at the overall TAM, first of all, it's a very exciting time in the compute market. When you look at every part of our business, whether it's server CPU, data center, AI, or our embedded business and our PC business, we see them all benefiting from the AI tailwinds. And beneath that, I think in each one of the segments, we see an opportunity to grow above the market. So from that standpoint, with our view of the TAM being greater than 40%, we are also saying that we will grow greater than that from an overall revenue standpoint for the company.
Thank you. And the next question comes from the line of Vivek Arya with Bank of America Securities. Please proceed with your question.
Thanks for taking my questions. Lisa, I'm curious, with all the announcements that you have made, how many gigawatt of compute does AMD have line of sight into for 2027? And what is AMD's monetization per gigawatt? I think the current assumption from everything you've announced is about 3 gigawatts. And I think from some of the warrant numbers that you had mentioned before, right, it seems to be at least $15 billion per gigawatt. So I'm just curious if you agree with those views, and then what is the upside or downside to either the gigawatt or the content assumption?
Yeah. So Vivek, there are lots of pieces to that question. So maybe let me take them one at a time. From a overall data center standpoint, I think we have given a little bit of color on 2027. We believe that the server CPU portion of our data center business will grow by over 70% year over year off of a higher base. And we believe the overall segment will grow by over 100%, so we'll more than double due to the data center AI ramping. So we do see a very significant ramp into 2027. We are very happy with our strategic anchor customers in OpenAI, Meta, and Anthropic. They are all in the process of ramping. The compute demand is high, and this is very much aligning their data center build-outs and their work with their cloud service providers together with our ramp. The way I would describe it is we have supply to more than meet the guidance that we've talked about, and the upside potential is there. The key thing is to work very closely with our customers as they're planning their build-outs overall. So I think from a Helios ramp standpoint, we're expecting a very significant ramp over the next couple of quarters. We've said Q3 is the very beginning of the ramp. Q4 is a step up, and then Q1 will be a further step up, and we'll ramp as we go through 2027. So hopefully that gives you a little bit of color on how that data center AI will play out. And in terms of the revenue per gigawatt, I think we've said double-digit billions. We're still in that range. I think there's, that looks like that's pretty much where it will be. And the key here will be, continuing to work with our partners as they ramp, because there's a demand for a lot more compute, and we would like to satisfy that demand.
Thank you, Lisa. And for my follow-up, a little of a technical question. When we look at the specs of Helios, it has, I think, almost 50% more HBM than the competition. And I think you have always had more HBM in your product. So how much of the benefit is because of having 50% more HBM? And then doesn't that expose AMD more to memory cost inflation? So I'm just curious, how are you ensuring that you're able to maintain margins, right, and get this memory allocation? And I think Jean already suggested you're comfortable with the gross margin range, but I'm curious how much of the benefit is just because of the use of more HBM, and does that still enable you to meet your profitability targets and allocation requirements over time? Thank you.
Yeah. So look, Vivek, we're working very, very closely with our memory partners across the board on both our GPU, HBM memory, as well as just the general memory for the systems across our data center business. And what I would say is, we've worked with our memory partners for multiple years to ensure that we have a strong ramp in our business. There is very good visibility into HBM allocation for what we expect to deliver in 2027. And the other piece of it is, in terms of the memory bandwidth and the memory capacity, it is one of the advantages of the AMD solutions. When you think about the larger model sizes, they really benefit from the larger memory footprint, and that goes into the total cost of ownership. We do recognize in this memory environment, though, every customer is looking at how to optimize their memory footprint. And we have the opportunity, if desired, to also modify that memory footprint if the total cost of ownership is not as significant in certain workloads. So think about it as the benefit of the memory is workload dependent, and we know a bunch of our customers are very, very happy with what that returns in terms of performance. But there are some workloads, let's call it medium-sized models, that may not get as much of a benefit, and in that case, we would address the memory footprint as you might expect.
Thank you. The next question comes from the line of Joshua Buchalter with TD Cowen. Please proceed with your question.
Hey guys, thank you for taking my question and congrats on the very strong results. I wanted to also follow up on the server CPU assumptions for 2027. So it sounds like the supply for that is locked up and you have ability to service higher demand if it continues to track that way. But I guess any help you can give us on sort of the unit and ASP assumptions that are baked in there? Like, I think investors are struggling to model the CPU market overall. So like, how should we think about, I guess, core count growth or whatever is the right proxy as we think about modeling this business? Thank you.
Yeah, sure, Josh. So let me maybe start with a little bit of grounding on the growth that we have seen so far. There's certainly both unit and ASP growth. So if you just look at our Q2 performance, when we said we grew over 70% in both cloud and enterprise, we actually had double-digit growth in both units and ASPs, but it was actually more unit. The unit growth was higher. That is very much the nature of our business. I mean, we're seeing just very strong demand from a overall market standpoint. On the ASP growth, we have ASP growth as we go to higher core counts, for certainly. But as we go forward, you should expect both unit and ASP growth. And what we have been working on very diligently over the past couple of quarters is, as soon as we saw the significant inflection point in server demand, we've been working across our supply chain. That's wafers, that's back-end capacity, that's substrates, that's all of the components to raise the overall capacity for servers. And we're seeing that play out through this year. That's one of the reasons we can raise the second half guidance. And we're seeing much more capacity coming in line in 2027 that supports the growth that we've been talking about. So you should think about both units and ASP in this framework.
Thank you for all the color there. And then Lisa, in your prepared remarks, you mentioned that Helios was ahead of your original forecast. Can we unpack that comment a little bit? Was that a comment on volumes? Was it yields? And if it's yields, how should we think about sort of the first quarter or two of Helios gross margins compared to, as it gets later into its ramp? Should we expect, gross margins to improve as it ramps? Thank you.
Yes. So Josh, when I was talking about Helios was ahead of our initial forecast, it was as it relates to the overall volumes. So let's call it the amount of demand there is for Helios in 2027. It's like an outstanding product. So what we're seeing from every one of our customers who's had a chance to not only spend time with Helios, but also spend time in our overall ecosystem, there's a high confidence that Helios will be a great addition to the AI portfolio, particularly around inference. And that was my comment about higher than our initial expectations. As it relates to your comments about yields and performance and what do we expect as we go through the ramp, one would expect that the overall yields will improve as we go through the next few quarters. The starting quarter is this quarter here in Q3, and we will be ramping over the next couple of quarters. And we always would expect that the yields will, continue to improve as we go through the first few quarters, especially on a product like this, which is, highly complex.
Thank you. And the next question comes from the line of Aaron Rakers with Wells Fargo. Please proceed with your question.
Yeah, thanks for taking the question. As you can imagine, I'll stick with the server piece of the business as well. At your recent event, you highlighted the server market, the new 220 billion TAM that you're throwing out there as kind of in three buckets, right? General purpose, I think you called it or defined it as sandbox servers, and then kind of the AI front end node. So as we think about the growth that you're talking about, I'm wondering if you could help us conceptualize the sizing of those buckets at all, and how big is that kind of middle category, that sandbox AI market, as we think about, growing 80% plus this back half of the year and 70% plus? How big of that opportunity do you see that becoming?
Yeah, so Aaron, what I would say is maybe let me start from the endpoint. So when you think about the $220 billion TAM in 2030, we actually see this agentic AI or these agentic sandboxes being the largest piece of the TAM. It's the fastest growing piece. It's also the smallest piece today. So in the near term, I would say that there is certainly growth in that area. But as we go out over the next 3, 4, 5 years, we think that's the largest growth in the server market. And I think the thing that is very strong about our portfolios, we believe we can grow in every one of those segments. So when you think about the types of CPUs you need for each of these workloads, you need sort of different optimization points. That's one of the things that we've really tried to point out. It's not just one CPU. It's actually a real family of CPUs that you need. From our standpoint, Venice is, absolutely leadership in all of the categories. So whether you're talking about per core performance or you're talking about overall socket performance, and that gives us a very strong position across general purpose agentic AI and also the head nodes for the AI accelerator business. So from our standpoint, when we look at our customer traction and our customer momentum going from Turin into Venice, Turin was already extremely widely used, especially amongst the hyperscalers. What we're seeing is when we go into Venice, the workloads actually expand. So there are more workloads that are going to be run on the next generation of EPYC than are run on the previous generation. And that's what gives us the confidence to say that we can grow substantially ahead of the market given the product positioning.
Yep. Thank you. That was very helpful. And as a quick follow-up, I know it's probably lower on the radar for a lot of people, but I think in the past you've talked about the client business, even with some pressures in the PC market growing this year for you guys on a year-over-year basis. Do you still see that? And are you willing to give any thoughts on what you might think of 2027 on the client CPU side?
Yeah. Well, let me say, Aaron, first of all, the client CPU business, we have continued to think it's a very important business. I particularly think that local AI will continue to become a larger and larger piece of how people experience AI. So I think AI PCs will become more important. As it relates to our client business in 2026, I think our first half performance has been very strong. And although we are expecting that the market will decline in the second half, the market's actually held up, better than most people would have thought. So our view is we will, we see the growth in 2026 on a year-over-year basis certainly there. And as we go into 2027, I think we have a strong product portfolio that is, coming on board to address, not just the traditional notebook and desktop markets, but, also as you think about a more, AI-centric PC experience like what we have been talking about with the Ryzen AI Halos. So I remain optimistic about the PC market as an important way for us to reach a broader set of users and our ability to grow, ahead of the market. The market itself will depend, a bit on some of the components. We're all watching the component costs and how that will play out over the next couple of quarters. But I think our portfolio and our rising content and enterprise are a very positive, for our client mix.
And the next question comes from the line of Stacy Rasgon with Bernstein Research. Please proceed with your question.
Hi, guys. Thanks for taking my question. First thing, I wanted to pick on something in some of the press release. It says that the data center accelerates in the second half. So it grew 107% year-over-year in Q2. You're guiding it up like in the 80s, though, like in Q3. So how do I interpret, which is not an acceleration, so how do I interpret that statement? Is like the second half collectively higher than the 107% that you see in Q2? Or are you just sort of, how should I be interpreting what you guys wrote in the press release around data center accelerating in the second half?
Yeah. Hi, Stacy. This is Jean. Good question. I think when we talk about this acceleration, we're talking about the second half versus the first half. If you look at the first half, our data center business, year-over-year growth versus the second half, we do think there's an acceleration. That's the reflection there.
Thank you for that. And then I think for my follow-up, I want to dig in a little more into the data center targets for next year. So you said I think servers more than 70%, the total more than doubling. I guess what I'm asking is how much work is the more in that statement doing? You seem to be on a trajectory that would take you well above those numbers. I guess just how should I be interpreting the more in the statement? Understanding that we're only in August of 26, I get it. But,
yeah.
What's on your mind there?
Stacy, you bring a smile to my face. So I would say we're trying to give you a way to think about 2027. And yes, the server CPU we're saying is more than 70%, which we think at this point is a very very strong statement, just given where the business is. And we do expect the overall data center business to be well over 100%. And the well over 100% comes because the data center AI business is going to be well over 100%, just given the strength of our strategic customers, the ramp of Helios, and all of the things that we've talked about. So hopefully that answers your more question.
Thank you. And the next question comes from the line of Jim Schneider with Goldman Sachs. Please proceed with your question.
Good afternoon. Thanks for taking my question. As you think about the early days of your MI400 series ramp and over the next few quarters, can you maybe talk about the customer diversity you expect in the early stages? I think you've noted 4 or 5 large customers that you've announced publicly. Can you maybe talk about how many of those customers will be contributing, let's say, in Q4, and how many in the first half of 27?
Let's see. So, Jim, I guess the way to say it is, we've talked about sort of the large frontier model companies, OpenAI, Anthropic, Meta. They will be consuming through a number of CSPs, so both hyperscalers and others. So the diversity of the business, and there are additional customers. There are lots of customers who are interested in Helios at, let's call it a more regular scale than gigawatt scale. So I think we'll have a good diversity of customers as we go through the next couple of quarters. And what we're really doing is matching to when the larger data center build-outs are ready. And so we are working with each of our customers on their data center plans and ensuring that we are meeting their data center plans. But yeah, I think there's a good diversity, especially as we get into the Q4, Q1 timeframe.
Thanks. And maybe as a follow-up, you mentioned data center readiness, and so I wanted to sort of test, how you're seeing your various customers and their ability to accept your products into their data centers, whether that's land, power, shell, or anything else. Any constraints that you see heading into the first half of 27 or even the back half of 27 that would give you pause about hitting your targets? Thank you.
Well, Jim, I don't think we see anything that would give us pause about hitting the targets. I mean, we feel very good about the targets. Now, when you ask me what the range could be, there is a range, and the range will depend on the ability to bring on more capacity in a timely fashion. So the way I view it is we're building sort of the entire supply chain, so ensuring that we have the entire, our silicon, CPU, GPU, networking components that go into it, all of the Helios components. I think we feel very, very good about that part of the supply chain. We are working very closely on the data center operators and ensuring that we have good visibility into what's going on there. And that gives us, let's call it, strong confidence in what we've guided for the data center AI business so far. And we're going to be continuing to look at how to accelerate some of those builds. And I think there's a clear desire on the part of everyone in the ecosystem to bring on more AI compute faster. We are seeing every day more opportunities with operators to accelerate some of that capacity, and that's much of the work that we're doing together with our customers and partners.
Thank you. And the next question comes from the line of CJ Muse with Cantor. Please proceed with your question.
Yeah, good afternoon. Thank you for taking the question. If I take your data center guide, Lisa, it sort of implies Instinct revenues of $30 billion, give or take. And so curious, two parts on this. How do you see kind of the revenue cadence first half, second half? And then if we isolate the Instinct only and start thinking about 455X and Helios, how should we think about the underlying gross margins for that business, starting in Q1 and then exiting in Q4?
I think, CJ, you're saying 30 billion. Are you talking about the server, or are you talking about which one are you talking? You're talking about 2027, right?
2027 Instinct, yeah.
Yeah, 2027.
Maybe let me help. CJ, I think what you're hearing from us is that your data center AI number is probably too low. And maybe back to Stacy's question, without going into exact numbers, I think this notion of over 100% should consider be well over 100%. And look, as we look at this, it's a progression over the next couple of quarters. And as we go through the next couple of quarters, we expect to continue growing Helios quarter by quarter. But yes, that's the best way of thinking about it. And I'm sure Jean can work on if you have further questions on that. But Jean, does that?
Yeah.
And on the gross margin side, if we isolate to Instinct, how should we think about beginning to 2027 and then exiting?
Yeah, I think overall, when we think about the gross margin for 2027, as I said earlier, it's really determined by both the pace of server CPU business ramp and the data center AI ramp. So I actually think, overall, quarter over quarter, it could be, different mix. It could change differently. But overall, when we think about this, we are actually very optimistic about how we manage the ramp of the MI450. At the same time, with the server business continue to improve and grow significantly in 2027. Overall, I think that they have a good offset in general overall. But I do think, it's important to remember we have multiple other levers from the company perspective, not only embedded business, but also client business. We continue to improve gross margin, and operation team continue to do a great job. So we'll give you more color when we get there to guide the 2027.
Thank you. And the next question comes from the line of Joe Moore with Morgan Stanley. Please proceed with your question.
Great, thank you. In the server CPU business, are you supply constrained now? It seems like the market's very tight. And do you anticipate that tightness persisting? And when you sort of think about next year, just the general ability of the supply chain to support the level of growth that you're talking about specifically in CPU?
Sure, Joe. I would say the server CPU supply chain is tight right now, and it has been tight for the first half of the year because much of this demand was unforecasted. As we get into 2027, the demand is better forecasted, and so we would expect that the 2027 server supply situation should be better than 26. We feel very good about being able to satisfy, what we just talked about, which was, over 70% year-over-year growth. And, I believe, depending on how things play out, there may be opportunities for that growth to go higher, as we, get through the next few quarters.
Okay, thank you for that. And is it, you guys are ramping a lot on 2 nanometer, and there's been a lot of focus on 3 nanometer being in short supply. Is that helping, or is it still, challenging to bring up new capacity on the new node that way?
Yeah, I think, Joe, it's always challenging to bring up new capacity on a new node. I think what makes our approach a little bit special and different is that because we're using the chiplet technology, we actually ramp in fewer wafers in the new node. And so that gives us the opportunity to, again, we're working very hard on ensuring that we get the supply necessary to, meet the very strong customer demand. So from my perspective, I think all of that is work that's being done. We're certainly looking at the overall supply chain, not just wafers. So that includes, back-end capacity, packaging capacity, substrates, all of those things. But we feel good about where we are to satisfy both the strong ramp in servers as well as the strong ramp in the data center AI business.
Hey, John, I think we have time for one more caller before we close out the call, please. Thank you.
Thank you. Our final question comes from the line of Atif Malik with Citi. Please proceed with your question.
Hi, thank you for taking my questions. Lisa, you guys announced a partnership with Cerebras at your advanced AI day and on disaggregate compute. Can you talk about just qualitatively how do you expect the sales to grow in the fast inference market this year into next year?
Yeah, absolutely. So, I think the inference market overall is growing very substantially over this year into next year. The fast inference in particular is an area which is, let's call it, starting to become more and more relevant. And so with our partnership with Cerebras, I think they have great technology. Together with Helios plus their wafer scale engine, we get a very good solution for customers, and we would expect that solution to start becoming available in Q4 in the Cerebras cloud and extend into 2027. But from our view, this is an important part of the market, and we continue to look at ways to, I would say, customize and optimize our technologies for the various workloads out there. So, we view this as just more of what we do in an open ecosystem.
Great. And one for Jean. How should we think about OpEx growth relative to that overall 40% market growth that you talked about in the next few years?
Yeah, I think Lisa talked about the TAM growth at 40%, and will be growing faster than TAM. From OpEx perspective, we'll continue to invest given the large opportunities we have ahead of us. But you should expect us to manage this OpEx increase less than the top line revenue growth. That's what our business model is designed for, so we can drive in more operating leverage to deliver earnings per share. That is also consistent with Lisa said, our EPS will be, significantly higher than $20 we outlined at our financial analyst day.
Thank you very much for all the analysts and investors that joined our call today. John, you can go ahead and wrap up the call. Thank you.
Thank you, ladies and gentlemen. That does conclude.
Okay. That was AMD Q2 2026. Stock's down 9%. SpaceX also getting hit. Jose, we'll start with you. Your reaction to the call.
Yeah, I mean, I liked it a lot. Lisa Su didn't gave us for 2027, they expect to double data center revenue. So that's that triple digit we were expecting. I don't think the market really listened or cared too much. She also kind of took shots at an analyst when she was saying that your numbers are just too low, right? I mean, semiconductor companies are just waking up winners, it seems. And then the other thing that I really did enjoy is when she talked about the earnings per share projection, which I think we talked about prior to the earnings call. It was $20 earnings per share between the next 3 to 5 years. She says that's exceeding significant. I think she added some other adjective, but it was showcasing that $20 is going to be kind of like a no-brainer within the next 3 years, in my opinion. So overall, still bullish. I mean, I was on X and I saw a lot of people complaining about AMD's growth. And I don't think the growth is the real growth doesn't start to the Helios, and real AMD investors, I think, are expecting that. Right now, we were just expecting maybe some short term from the CPU side, but the Helios rack is the end of Q3, and I mean, for it to double in 2027, I think that's more than I need to hear.
Tanner, your thoughts?
Yeah, I mean, I thought the call was good. I don't think there was too much there that was negative or called for the stock to be down 10%. We had the CapEx concern and these sort of things, but I think an important part that people need to price in as well is that we're up like 140% year to date. You know, that's an extremely important point. A little bit of drawback on, sell the news is perfectly healthy and doesn't change their outlook in going to achieve those triple digit growths in data center revenue. I think the build out is strong. They're seeing that from their customers, and we're seeing that across many of the semi names. And so I think the call was fine. Yeah.
Neil, before you go, I'd say the same thing. I mean, the stock's up a lot year to date, so it felt like maybe the call wasn't that exciting or fun, but it's also not the same stock it was at 300. I thought the answers were answered in a way that you would expect. And even Stacy, who tends to be a bit of a stickler on AMD, Lisa finally said, "Stacy, you make me smile," right? Trying to acknowledge, like, dude, we put up with your shit for a while, but like, here's the response you're looking for. And essentially the response was like, we are going to get to those growth expectations that the market wants. It's just not happening overnight. And the stock has already reflected a lot of that with the 150% year-to-date gain. Neil, your thoughts?
Sorry, if I could just butt in real quick. Stacy was on CNBC right before that call even started, and he said he liked the call, he liked the results. So even he didn't have much negativity to bring. Sorry, Neil.
No, I agree. I mean, stock is now down 18% from its all-time highs, but still up then over 130% year to date. So again, coming into this earnings report, a lot was priced in. But like Jose said, $20 in earnings, the target, they're going to beat that estimate quite easy. According to them, the revenue growth, they said also substantially above their over 35% target. Then with regards to the data center segment, triple digit growth, server CPUs, over 80% year-over-year growth in the second half of 2026, and then above 70% growth for the full year of 2027, of course, of a much higher base. So yeah, the growth acceleration is coming, which we talked about it before they reported. It is coming. It is not going to happen in one quarter. It's going to happen over the next 12 plus months. But the growth acceleration is coming. Of course, right now, yes, you have paid for that future growth, which is probably why we are down a bit right now, but still up significantly year to date. But yeah, we're back to yesterday's prices, so it's not the craziest thing either.
Anything else people have on AMD? Are people actually mad in the chat? I know it's down 9%. It's annoying, but like, it's not like it was down 10% going into the print or year to date, right? It's one of those things where it's like, it's made a massive, massive move.
Yeah.
And some things it just can't. Sometimes this stuff needs to. I mean, if it was 600 right now, as exciting as it would be, it would probably be like, okay, are we getting a little too euphoric here? I think 450 to 500 consolidation is not crazy at all.
Yeah, Nvidia is only up 12% year to date. So, I mean,
which, by the way, I don't know if it was the Elon comments, but Nvidia's been getting old. It got to 217 after hours. We haven't seen that.
Yeah, he made some comments on how much they could charge as well for Vera Rubin. I'll need to find it again.
Elon?
Yeah, Elon said something about how much they could charge per watt. That was way higher than expectations, but he said he was guessing or something. So I think it was even a little bit higher than.
My best guess for monetization per watt would be somewhere between 30 and 50. This is just a guess, so take it as a guess.
He also said he expects SpaceX, well, he thinks SpaceX may reach $1 trillion in revenue by 2029, build factories on the moon, and apparently have a revenue run rate of $100 billion by the end of this year. But that's the CFO. Sorry, the CFO said that. So
yeah. They do $1 trillion and have a space base on the moon by 2029.
The quote is SpaceX now expects to reach $1 trillion in revenue in 2030. What are they going to do this year? Like 40 billion, 50 billion? A year earlier than previously projected, with a non-zero chance of reaching it in 2029. And then he said, December is not a question mark for the 100 billion IRR target, adding that this is what the company would reach even if it basically did nothing. Dude, there's got to be a bunch more compute deals we don't know about for SpaceX.
I mean, the Anthropic deal is already pretty big if they continue for the whole contract. I guess adding Cursor helps to reach
Google
those
and
numbers.
Reflection, you know, those are about the size of the Anthropic deal. So,
yeah.
I mean, Lisa Su just mentioned it right today that what analysts are probably projecting is extremely low. I was also some company called Sterling reported earlier this morning, and they're kind of like a construction company. And they mentioned that the demand for 2027, 2028 on data centers is most people aren't even projecting that. So there's different companies in this space, not completely related to semiconductors, that are still saying this explosion of compute is coming 2027, 2028. One thing that I did like about SpaceX is after Elon said the exclusivity thing, two important people from NVIDIA actually retweeted. One of them was Jonathan Ross, and the other one was Sunny Madra, and both of them are coming from the Grok acquisition. So for them to have made that retweet, I think SpaceX is going to be a big purchaser of NVIDIA's LPX, which is where they're going to be buying the Vera Rubin, and the LPX, and that's kind of this agentic low latency solution. And if Elon is going to be building some massive capacity here, I'm pretty excited about this. Even though I know it's AMD's call, but regardless, this is pretty cool for NVIDIA.
Yeah, I didn't see that. That's huge. A lot of talk has been going to the Vera standalone, to Vera Rubin, but there's not been a lot of talk about LPX or LPU. So that could be really big that Jonathan's retweeting that.
For the person in the chat who said I'm a SpaceX hater, the estimate for 2027 is 73 billion of revenue. Elon says 2 years after that, we will do $1 trillion. He's talking about 50xing it from here and 10xing it from a high estimate at the end of next year. I don't feel like it's hate to be like, I don't know if that's going to happen, man. And if it does, I feel like it's even more bullish NVIDIA, because you would have to imagine those are going to be compute deals. It can't be Starlink. Like, it can't be fucking Starlink. That's got to be compute. And how many people have that much money to pay him? Like Anthropic, he's not going to ever work with OpenAI unless like there's no one else left, right? He hates them.
That's the thing, right? Like, why I'm so heavy on NVIDIA. It's like, if you are a believer in what Elon has to say or anything like this, if you guys know what I did in 2025, rotating Tesla into NVIDIA, but they are going towards the same goal. You know, you're not going to have this Tesla or SpaceX AI goal without selling chips from the largest supplier of GPUs in the world.
Yeah, but NVIDIA doesn't care. Well, it does a little bit, but for Tesla, for SpaceX to generate $1 trillion in revenue, where does that revenue come from?
That's my question.
It's not going to come from Grok, because let's be honest, Grok is not in the conversation with Claude and Gemini.
I don't think you can call that.
So
it could change. It could change really rapidly.
Change.
How?
It could, but enterprises
are they
are
going
not
to
adopting
take?
Grok right now.
OpenAI wasn't in the conversation before. Kimi wasn't in the conversation. DeepSeek wasn't in the conversation. They leapfrog each other all the time. So Meta Muse Spark 1.1 was a massive step up. I wouldn't count literally any of them out. I would keep Grok, Gemini, Meta Muse Spark all as possibility, like possible frontier names.
But it's $1 trillion in revenue. Like they will have to replace Enterprise, which is Anthropic. They will have to replace OpenAI ChatGPT from a consumer, and they won't replace Facebook Meta with all of their ecosystem. So it's $1 trillion. It's not like he said, $100 billion by 2029. I would have said, you know what? Okay, so be it. So is it purely going to be from more compute deals, like selling intelligence? Or because I don't see Grok having 1 billion daily or monthly active users.
And
also, we don't know if selling intelligence is going to be profitable. Like if Grok somehow gets up the leaderboards, I would imagine they would have to bring costs down substantially. So even if they get that revenue, it's like, is that even going to matter if once again it is commoditized by 2029, 2030?
Yeah, they don't have a single capital light business. Every single one is extremely capital intensive. So what funds this?
Yeah, and to your point, Tanner, if they're doing $1 trillion in revenue, I mean, I would imagine NVIDIA's got to be a few trillion higher than what it is today. Because the only way they get to $1 trillion in revenue is compute. The only way they get to the compute deals is if there's some large players that are buying a lot. Either SpaceX is buying a lot of those NVIDIA chips, or NVIDIA is selling a lot of those chips into those players to then hook it up with SpaceX's overall.
You can't think it's going to someone else. He just told you it's exclusive.
Yeah, so then the question is like, I mean, Amazon by 2029, I think, is actually projected to do $1 trillion in revenue. Again, SpaceX ended 28. Oh, really? 28. Okay, so yeah, I don't know if it's going to happen that easily. Tanner, do you understand? So he says, my guess for best monetization per watt would be 30 to 50. Do you know what the current prices are?
No, I usually look to someone like Jam and Ball, for example. He posts a lot about the per watt metrics. I'd have to, I can't tell you off the top of my head, but something like Semi-Analysis or Jam and Ball might end up posting about
but it's not 30 to 50, right? It's lower.
Yes. Yeah. It's much lower.
Well, maybe that's where SpaceX gets their margin from then at that point.
Yeah, but what would make them benefit more than every other hyperscaler, neocloud? You know,
it's a good question. Like, and then you've got 115 billion of stock that can get sold in 2 days. Like, I don't understand this at all. I don't get it. I don't know how someone buys the dip here without thinking that you're going to be exit liquidity. I mean, AMD is down because it went up a lot year to date. SpaceX is down because I think people are realizing this is just not the IPO that is super friendly from a valuation perspective, or quite frankly, from a growth perspective. I mean, part of the reason I think it was up today is because the S&P was up 2%. Like when the S&P goes up 2%, everything's going up. I mean, you don't really get those days that often. So if we have more consolidation, then the market's going to have to actually judge SpaceX. But definitely SpaceX and AMD gave a little hit to the market after hours in terms of the high beta names because, you know, those are two massive names taking a hit after hours. Okay. I think that's what we got. Jose, any other thoughts on AMD or SpaceX?
No, I mean, I think the biggest complaint for Lisa Su is she gives us puzzles, I think, and I just want a clear answer for her, right? Just like Stacy, right? We want to. He wants to learn more about that 100% growth. And he's like, we said more than 70%, and there are a lot of other things like that. I just wish the AMD team was a little bit more direct on some of these numbers, because I think there was an analyst that asked how much dollar value do you get per gigawatt? Nvidia has kind of talked about like 50 billion, now getting closer to 70, eventually getting closer to 100 billion. Lisa just gives us a double-digit billion, like, okay, so somewhere between 10 to 99 billion. Appreciate that clarity. So if there was one major complaint from me, would be that. I wish they would be more straightforward with some of the numbers, or the range not kind of going from the literally bottom to the top.
Neil, Tanner, any last thoughts?
No. I mean, I did check Zeta in the meantime, like why would the stock be down after so many beats? So from what I understood, it might be driven by organic growth deceleration in the second half of the year, some gross margin compression. And then the forward guidance raise is just them adding the beat that they had in Q2 and the slight beat from the next quarter. But then again, they might be sandbagging because maybe Q4 might be a huge quarter for them. They see an acceleration in growth, etc., etc. But for now, that's what I got, although it's not an expensive name, so it might be an overreaction.
Yeah, we didn't hear much about Zeta. Was that a triple beat or what happened there?
It was a triple beat. I'll obviously go through it tonight. One thing that did happen is the algo said they missed on EPS when they didn't. It's like Robin had said they missed EPS. It sent the notification to everybody. Robin does.
Yeah, I see that here too.
That didn't happen. But outside of that, maybe that's not the reason. I mean, the stock was up 7% on the day, so it kind of just gave it back. But
what was their EPS? I see on Earnings Hub it says 3 cents versus 15 expected.
So I think it was 19 because there's a adjusted and then gap. The EPS was 21. The expected was 19. So 11% beat. But sometimes the websites have it wrong. So I'm looking at a double beat and a raise on guidance. I don't know. I got to listen to the call, see what was said right here. But I mean, it was overall Green Day. It was Green Day yesterday, so you had a lot of names just get a lot of love. And honestly, when AMD and SpaceX go after hours, anything high beta, it's going to take a lot for you to reverse that general market sentiment. Like Arista had a fantastic quarter on every level, and that's why I think that stock's still up 9%, but everything else taking a hit. Zeta was also down about 12%, so now it's down 6%. So you have a little bit of a reversal right there.
What kind of music do you listen to on a day like today, Amit?
Are you setting up a joke or something?
Any Green Day? Sorry. I'm sorry. I'll leave. All right, guys.
W's in the chat. W's in the chat. I should play this given you said this.
Someone just wrote Indian music. Like, I'm trying to set up a joke here, guys. Like, come on. He's more Canadian than me. He only listens to Drake.
Dude, those new 3 albums. Well, have you listened to all 3 albums, the new ones?
No, not at all.
Wow, hold on. The Drake album came out 3 months ago, and you haven't listened to a single song off all 3.
Nope, it's still in the ice for me.
And this is supposed to be.
You know, Amit, we are 4 here. I am pretty sure out of all 4 of us, you are the only one that have listened to it.
No, but
Jose?
Tanner is from Canada. He claims that he's a Drake fan. He hasn't listened to the new album, 3 of them. You're never getting past this, Tanner. There's no way in hell you're ever.
This is the first time I'm hearing that there's 3. You know,
yeah, you are a big fan.
What do I'm not, I'm not saying I'm a fan. It's just you said there's this artist, his name is Drake, and you explained to me that there was a person named Drake, and I'm like, okay.
You don't look like you listen to Drake, so I thought I had to explain it to you. And now you don't even listen to his new songs after 3 months?
I think I have more Drake songs than any other artist in my playlist overall.
Apparently not any of the new ones.
Nope. That's how much of a fan I am. I don't even need that many, all the new songs. Just the old songs I have more than anyone.
It's got Kendrick Lamar now at the top of the playlist.
Amit loves Drake. He loves Justin Bieber. He's the real Canadian around here.
I do love Justin Bieber. I think I am the real Canadian, to be honest. Justin Bieber.
Celine Dion?
Now we're talking.
She's amazing, but Justin Bieber and Drake.
Okay, so outside of his grinder dates. Go ahead, sorry.
I have to get the grinder in there. Outside of AMD and what's his name? and SpaceX, this was still a green day. S&P goes green on the S&P.
It's those high notes.
Tanner, you
The
can
other
hit
one
the
is funny.
falsetto, too.
The bullish one is funny. I laughed while I was listening to the earnings call.
The bullish one is fine. I'll play that one. But I've
This
heard
is
Tanner do it. Tanner can hit the falsetto just like me.
It's my low testosterone. I can get real up there. What's your excuse, Amit?
You want to do it for us right now?
No, you're putting me on the spot now.
Okay, so this is what I wanted to say after the AMD call.
What a start.
But the stock's not reflecting it. I tweeted under Chad who posted something about Palantir. I think that's bullish. It legit sounds like Mickey Mouse, dude. Legit sounds. Anyway, is the straight open yet? Don't make a straight joke, Tanner. I already know he's thinking of a straight joke.
Dude,
I know he's thinking of one right now. Yes, I know what Green Day is. Okay, wake me up when September ends. I know Green Day. Anyway, thank you all for joining. Appreciate you all. By the way, I think I might as well announce it right now, but over the upcoming weeks on Wednesday, Tanner, Jose, Neil, and I will, I don't want to say it's a podcast, but it's kind of a podcast, but think of Market Close transitioning into these three guys every Wednesday. So on earnings day is going to be a little different unless we're covering the same earnings, but basically every Wednesday, you'll get all four of us, usually every week. And yeah, we'll be here analyzing markets. So when we don't have earnings, it'll be a lot to discuss. And we've obviously done a lot of streams together, but why is Jose laughing so much, bro? What grinder joke is making you laugh?
No, because you said it wasn't a podcast, but then everybody, when you explained it, it was like, sounds like a podcast to me.
Because it's a stream. It's not going to be like a separate podcast, but it'll, although Tanner might clip it and turn it into, so yeah, I guess it is going to be a podcast. The point is, every Wednesday, all four of us will be here after market close.
Comedy Central.
And yeah, we'll talk about the stock market. And all this. Dude, Jose during the streams is just straight reading the chat and laughing, like complete, like he is not listening to the call.
The guy, everybody there is funny. It's hilarious.
That is true.
I can't believe you guys held it together on Aer Lingus. I lost it. I'm sorry. I looked it up. It's a real airline. They've been around for like 90 years. I had no clue.
Jose's like, what the heck is this guy talking about? It's like when we fell asleep during the SpaceX earnings call, they were talking.
Yeah, it was during airline. They did a partnership with Aer Lingus.
And they said that people rather have a stopover than a direct flight because they love Starlink so much. I would love to meet someone that loves a layover because he gets internet for like an hour.
Yeah, I don't think I would do a layover just for internet.
The airline that I love the most does have internet. I'm pretty sure it's with Starlink. I'm not 100% sure, but Porter Airlines, if I can get them, it's above anyone else. I mean, it's by far every Canadian knows this. They are by far the best airline in the world.
Yeah, because Air Canada sucks.
Air Canada sucks. It's the worst.
Yes.
I'm looking forward to this Wednesday stream podcast thingy just for because Neil has dry humor. Tanner has no humor. Jose has a ton of humor. I think I have some humor. I feel like it's going to be a crazy mesh.
You gave yourself humor and gave me no humor? You said the Green Day joke. I'm on cloud 9 right now.
That wasn't good, bro. It was okay. It wasn't amazing.
Yeah, you're going to use it like 2 weeks from now. You freaking loved it.
Dude, I've used it a billion times. That's why I wasn't that impressed. I've used that punchline so many times.
Have you really?
Yeah. So many times.
All right.
All right. Thank you, Greener. Speaking of podcasts, Basis Points just uploaded a new episode with our boy Sam Solid. So there it is right there if you want to check it out. We actually did talk about AMD earnings. We recorded on Saturday, so you'll see if those AMD predictions were correct. But yeah, tomorrow, do we have any earnings? We have a bunch of
SanDisk,
them.
Melly,
Neil.
Axon, Shopify, Uber in the morning, but SanDisk, Western Digital, Axon, Melly after hours, I think should be good enough.
Shopify in the morning.
Yep.
Okay,
And
so I
Uber
don't-
and Eli Lilly, I think, as well.
Okay, so I don't
Should we
think
do
we're
it tomorrow? I'm listening to SanDisk. So if you guys are doing that, then
Yeah, we'll figure it out if we're listening to any together. But definitely important earnings. So, tomorrow's Wednesday. Why am I looking at Thursdays? Tomorrow's Wednesday. Oh, okay, you're right. SanDisk, Melly. Okay, yeah. Okay, so we actually do have a bunch of them. Duolingo, Elf, Figma. Okay, cool. All right. Thank you all. We'll see you all tomorrow. Thank you all for being here. Again, sucks that AMD SpaceX down after hours, but SpaceX again, valuation concerns, and AMD great quarter. It's just stock was up a lot year to date. So we'll be back covering gold.